There we go. I think I fixed it. Weird. Okay. Had an audio issue, and I believe it's resolved. Let me just, unless someone can tell me in the chat. Um, for some reason, people are shy about the chat. Last time they didn't tell me there was an audio issue, but this time I caught it myself. Let me just make sure it's working. Oh, let's see here. There we go. Okay, I'm confirmed live. Okay. Gonna have to, unless people are willing to volunteer to share that everything's good, I'm gonna have to take some extra time to figure it out. Um, but I know we're good now. So it is Wednesday, February 22nd, and 2023, and we're gonna get the Fed meeting minutes in just a couple minutes. And I'm not gonna trade when it's released, but wanted to share some ideas with you that I'm looking at. They're very new, right? They're barely scratching the surface of what's possible to do with this new idea. But I've found a few patterns that I think are working. So I want to share them quick and see what you guys think. And also just as a journal entry for myself so I can not forget what I found based on my hours of work. And then I can go back and if I forget or want to find something new maybe that tweaks it a little bit or filters it, I can go back and say, well, here were the rules, so let's try this in a different scenario. So if you want to get a hold of me on Twitter, it's at RedmanTrader. If you want to learn more about trading with an algo to make your entries more systematic, you can contact my coach Simon, and you can ask for a 5-day free pass to the trading room where we trade in. You can give him my email, tradeletternwordperform@gmail.com. Okay, so let's look at this. Like I said, we're gonna have Fed meetings minutes coming out, so I'm not necessarily gonna be like live trading at that point. Once things settle down a little bit, I might catch a trade, but I primarily wanted to do. I'm having an okay day. If anyone cares, and I'd rather not give it back. Especially, I had a red day yesterday. It was my own fault. It wasn't a bad red day, but it was frustrating because I missed some good opportunities. And so today, since I traded okay, the best thing for me to do is to pivot, like close it down unless I find like an A plus setup, and then pivot to learning or teaching. But I learn pretty well just by kind of talking things out, and so I might as well just make a video journal of it. And if other people find it interesting, that's cool too. So we're looking. This is NQ chart. It's a Renko chart, 24 tick to get a new Renko brick printed in the same direction. I realize there's a bunch of colors and signals and all that, and no one knows what they all mean. And the truth is that don't let that bother you, because all I'm doing is I'm taking the footprint and I'm telling it when this certain condition exists, show me this color or show me this signal. And by doing that, I don't have to interpret the footprint constantly, which is really mentally like effort intensive for me. Some people just do it easily. For me, it's not easy. It takes a lot of focus because I'm kind of ADHD. Um, so it's the only way I can do this. Like I can't watch the DOM and just like constantly interpret. I'll get stuck. Like I'll get fixed on like a bias or whatever, and I'll make like 3 mistakes in a row like that if I try to trade that way. But if I have visual signals that confirm to me that yes, this situation or this condition that you told the program to alert you to actually it is present. It did happen. And so that confirmation lets me kind of sit back and have objective data that says like at this point this was occurring, at this point this was occurring, and then that makes knowing what I'm looking for a lot easier. And then it also makes reviewing it a lot easier, because when I go back and review the day, I can see exactly where those hints were. I don't have to dig through the footprint. It's a hell of a lot easier just to look for the pink bar or whatever. And all of a sudden see like, okay, that was the decision point. Now to learn, let's see what pattern of these signals would have alerted you to it being an opportunity if it did continue. Obviously, you're not going to catch every single one of them, but once you really start studying this thing And I've added other signals to the trade and perform one. This is a lot more complicated. And in fact, this is the simple version. The complicated one is has a lot more. We'll go into that later, but it has a lot more going on the complicated one. But on the simplified one, which is a little bit easier to teach from and a little bit easier to read for interpretation purposes, not necessarily for execution, but for just interpreting what's happening. I only really need these signals. But if I want to know how to tell the difference, for instance, between this potential entry and this potential entry, other than price difference, what I would need to, well, actually, that one's not pink. Let me find a pink one. This one, right? So if I'm trying to say, like, well, which one of these is ideal, and then maybe we'll do this one, right? So 3 bars that look pretty much similar, same signal, and you could say, like, even if you had a pattern that's like, if you see, I don't know, something happen and then you get a pink bar, you could enter, right? If you keep it that simple, what you're gonna miss, you're gonna have a lot of these, right? Where you're grabbing the trade just at the end, and even if you didn't have those zones from the profile, it may not look all that different. Like like here, that looks like the top, right? And that one actually worked fine. Whereas this one, we don't know if it's the top or not. And so, but like this pink bar it turned out to be the top of the rotation, right? But this one didn't, right? So it with just these signals, you're not gonna have enough filtering to execute trades, but you're going to be able to see that, like, okay, this pattern is real. It actually occurs regularly. It's just that, let's say maybe I need to filter out this one. Here, we'll change the color and I'll show you what I'm talking about. So this is the one that needs to be filtered, and this one needs to be filtered. So in a best case scenario, if this is all I care about now, is just like, and I'm just kind of, this is a tangent, but I think it's important because people often ask, why are there so many signals? And this is why. Because once you have the pattern, and like I said, let's just take a simple pattern, which is buy pink bars, right? It's not that simple, but let's just say it was. You'd still have to further filter that, because you'd end up having like maybe a 50% win rate most of the time. Maybe less if you only wanted to have a 15-point stop, right? So you need more signals or more information to make those decisions. Well, by using the same time frame but more, I guess I need those because I need to be able to see but more information. What we'll see here is that this one, look, too many damn things. I wish I could erase all the rest, but then I'll lose my arrows. So my apologies that it's so busy. This one has additional signals, right? It's green, and then it's also got the diamond indicating that it formed relatively quickly, whereas this one and this one have nothing other than just the pink bar. So maybe they're less aggressive of a bar. And then if we go back here, these two were also less aggressive of pink bars, and maybe not a great place to enter the trade, because as you see, if you wanted a 15-point stop, you'd get stopped out right here, and if you wanted a 15-point stop, you'd get stopped out right there, right? So these two it'd be better not to take those, right? If you could filter out the ones that didn't have any signs of aggression, you all of a sudden go from like a 50% win rate to maybe like 60, let's say, and that's a big difference with just that one added piece. So that is why there are so many signals, is because I want to have, there it is, I want to have choices when it comes to what gets me in the trade. I have more than one setup and more than one pattern that I'm looking for, but I also need to know which ones to filter out and which ones not to, and I need to know that in an instant. So the result is I end up basically just waiting for certain patterns, right? Waiting for a situation where I have signal A and then signal B, and then signal C, let's say. And then I would then look for my execution trigger. What's it called? The trigger is what I call it, to get me into the trade. So the way the logic works, because this is going to apply to every single, it doesn't matter what system you use or what's getting you into a trade, your logic should be similar. Okay, it doesn't matter what these mean. Like, you could use whatever you want and then test to see if it works, but the logic is exactly the same. It needs to be, just like this. When I have this condition occurring, and these variables are so and so, are the same, then I know to look for trigger X, which might be a sign of aggression, for instance, in one direction. So an example of that logic would be, I need a condition where I know we are bullish. I also need a variable, which is I need a pullback into a location that would need to be specified. And then when that's true, I will look for trigger green bar or trigger white star. Right? Just as an example. So then the next step to building a setup is, okay, so how do you know when that condition is true? How do you know that it's bullish enough to take the trade where you enter on the green bar or enter on the star? Like, what needs to be there to tell you that your odds of that green bar or star entry working for 15 points more often than it hurts you for 15 points increases significantly? And whatever that needs to be is up to you. If you need something that works 60% of the time like I do, then you need to be pretty specific about what bullish momentum means. Something like, an RSI over 60 or something is probably not going to cut it, because you're going to, it's just not going to do it. You're going to run into situations where it was really bullish, but now it isn't. And you'll end up not getting that 60% win rate. So what I'm trying to say is that what you really need is something a little bit more sophisticated than just an out-of-the-box indicator that gives you above or below X level. What might work, though, is if you like the RSI or stochastics, or it doesn't matter, right, what it is, whatever indicator you like, and you take that condition where you're like, wow, whenever like such indicator is above this certain level, that's usually bullish, but sometimes it's not, right? If you've got that condition and that problem, all you got to do is solve for the variable. What is the variable that makes it not so bullish, even though RSI is above 60 or stochastics are pointing up and above the midline, or whatever you want to use? Just figure out the variable. And that, like I said, it could be anything. Some hints on what you might want to use for variable would be something like volume, or maybe relative volume, or time, or speed. Derivatives like that work really, really well for variables. So a very simple conditional trade setup might be something. Again, I'm not saying this is working, definitely not financial advice, just totally throwing it out of the blue, right? Again, if we said we like stochastics, let's say, I want to find a situation where I have stochastics curling back up over the zero line after, let's say, not going any lower than 50 or negative 50 or whatever you want, whatever you do. And then I also need relative volume to be increasing and speed to be increasing. And then if you've got something like stereo charts, you can just plug that into your study. And then every time that happens, it could give you a little dot, let's say. And then you could say, okay, well, now I've got my dots. So does it help, right? You no longer have to look at the indicators because the dot tells you everything you need, right? It would tell you like, okay, remember that condition you told me to tell about? That's happening right now, right? So once you get the dot, well, then you'd say, okay, now that I've gotten the dot, how many times does my trade work? And you'd be like, okay, well, there's entry number 1, and there's entry number 2, and here's entry number 3. And you could just keep doing that, right? Although the problem is that eventually it's going to work, and then it's not going to work for a while, right? And then it's going to work, and then not work for a while. Why? Because that's just the way markets are. You're not going to get anything that's perfect. But you can further limit your you could further filter by saying, you know what, if I have a location on the profile that I know is probably going to be resistance, like yesterday's point of control, I'm going to ignore trades that wouldn't give me good enough risk reward just to get to that level, because that's probably going to act as resistance on the first try. So you might be able to get rid of this one, right? But this one is clearly an entry, and this one would clearly be an entry unless the condition has for some reason changed. Okay, and so that's the question then. When does that change? What has to happen where that simple setup stops working, right? And that takes a lot of time to go back and backtest. There's our minutes, and so this one would have stopped, and then this one probably works. We'll see. Yeah, it already got 15 points. So if you were bold enough to trade right into the minutes, that might not have worked. But if our conditions were still the same, okay, now we've gotten underneath a dot, right? So now you would no longer be bullish, and you'd be waiting for a dot to be bearish. If that was our setup. And like I say, that's not how it works. But I'm just using it as an example. But yeah, that's what you need, in my opinion, to have a systematic trade setup. And if you can do that, you're going to see huge changes in your trading and the results of your trading, because you're going to be able to now say, how often does that setup work? And you can fiddle with it all you want or make a new one, and suddenly you just start trading those setups, and you stop trading when you just impulsively want to, and you'll have a respectable win rate if your setup is reliable and valid, right? And if it's not, you should stop using it. But you'll know that. You'll know that since you're only trading your setup, you'll know the problem is the setup. It's not you, right? Unless you have a hard time executing the setup, in which case it's probably not the setup, it's probably you. So I'm going to demonstrate a couple of these momentum setups, or these conditional, these conditions that tell me whether or not momentum is in the market for you. And as a result, I'm hoping that you can then take these same ideas and apply them to maybe what you're already using, but just don't have it systematized. Because a lot of these same general techniques are going to work regardless of what the actual indicators are. You just need to know, like, the form. It's like you need to know what the possibilities are for how it might present itself. So I will give you multiple examples. So what we're going to look at first is this indicator in the middle here. Okay, I'm not going to go in how to build it exactly, but I will tell you what it does. It is a customized indicator that I built by putting together other indicators and looking at derivatives of indicators. It's math, basically. Okay, it's just built with math. Like, if you understand how volume delta works, it is a very similar concept to volume delta. So in other words, is it an aggressive, are a lot of the buyers, is a lot of the volume on the bid, or is a lot of the volume being triggered on the offer? It's not all it's looking at, but it is related to that. Okay, and then it's taking that information and it's relating it to where volume is compared to the range as well of the bar you're in, as well as the range of the rotations. Okay, so it's combining all of that information, and it's giving me an oscillator, which is this line right here. So that line right there, I'm not even watching it. Right? It's just influencing my signals, and I'm leaving it there so that on review I can see if there's other patterns that I'm missing. But primarily the way it works is if you can get it into this gray area from below, okay, and then you can come back and start bouncing off that grayed out area, it's usually bullish. If you come under it and you start rejecting out of the gray area, it's usually bearish. So this, for instance, is a bearish look, right? Whereas when it bounces off the other side like this, that's more of a bullish look. Okay, one of those got an entry signal, this one, and this one did not get an entry signal. But that would be how you, if you wanted to read it visually, that's how you would read it. Then once you get up above, get rid of this line. Once you get up above the grayed out area, like this and like this, the energy required to continue the move in that direction, the required energy increases. So what you'll see a lot is during consolidation, it will act as resistance. See that? How this acted as resistance, right? And then you can actually extend that and find breakouts like this. See how it broke out of that trend, right? You don't necessarily have to buy it right there, but you know that this downtrend has basically ended because you've broken out of that trend, and then on the pullback, you held the gray area and you held this pivot, okay? So momentum, volume momentum, it's basically momentum of volume, is was decreasing here. It made a divergent low and a second divergent low, and then change the trend right there. And we got our entry signal here. I just didn't take it because it's, like I said, I didn't want to trade it. But it definitely signaled. And then you can see what happens over here. It continues to kind of act. Now, it's not going to be like underneath it is bearish and above it is bullish. Unfortunately, it's not that simple. But if I did the same thing on the opposite side, you could get a sense for what needs to continue to hold. Oh, where'd it go? You get a sense for what needs to continue to hold or be reclaimed. So if you did it like this, right, you'd see that right here, it lost it, right? So if it would have come back up and rejected off the gray area, then it's bearish. So right here, it lost it, but it didn't, right? It went higher. Here, so this is actually a buy opportunity when that doesn't happen, right? There, oh, sorry, there. When that does not hold, you get a buy signal. Okay, so then here, same. So see how this did the bullish thing? It bounced off the gray area and then bounced. As long as it doesn't reject at the trend line, we're good. It just has to keep making higher highs, right? When it makes divergent highs, in other words, higher highs on price but lower highs on the indicator, it doesn't necessarily end the trend, but it generally results in a period of consolidation, just like any momentum, right? So once we got the divergent high, it slowed down and went and corrected sideways, and then once you got this dip, you could be a buyer again because it flushed here, it flushed the range, see that? And then it didn't reject. Oh, whoops, it didn't reject right here, right? It didn't reject there. So when it doesn't reject and it's bullish, you can buy it. Now, you can visually watch it and you can just trade it like that, and that's fine. You'll probably be 1 bar late, because you'd have to wait for the signal and then you'd have to execute or whatever. But you can do it that way. and that would be fine. Nice. Let's see if we test. I'm just kind of curious to see if they save this, because this is probably the last opportunity to buy. But you see what happened. Our line got rejected. So see here. Oops. So that got rejected, right? The trend line got rejected, and then they rejected off the low. See, of the shaded area. Generally, that is bearish, right? Here is generally a bearish signal. So now we'd be looking for aggressive sells opportunities in that area if possible. So if they lift it, now the hard part is that if this pivot is defended, it can rip again, right? So there's going to be times where it sets up, dips, and then rips, and it's not going to be often, but sometimes it will. But you can filter that by not being as aggressive and waiting for this pivot to get taken out, and then take the retests if you wanted. But here you can see they're trying to save the pivot. They probably will fail because of this resistance, but sometimes they won't, right? So you'd have to make a judgment call of what you do when it actually sets up here. Now, I don't know if it'll set up. Doesn't look like it. See what it did? Came all the way back up. See that? It didn't stay down here. The red line turned green. See that? Red line turned green. Telling me even if it did set up here, well, it wouldn't set up here, but even if it did set up here, I probably wouldn't want to take it because it's no longer bearish. So you could do it that way, right? You could just visually watch it. Instead, what I've decided I'd prefer to do is make little markers, the blue and the yellow markers, to make those signals that certain things are happening that will tell me, without even watching the indicator, whether or not I should be looking for bullish trades or bearish trades. So I'm going to make it as simple as I can. There are multiple patterns you can use, but the easiest way, I think, to use it is when you get just one all by itself, right? One yellow or one blue. That is generally a sign that there is a potential for a shift in the trend, but you need to have the other side react. So once you have the one, what you then need to find is you need to find 3 of the other ones. They don't have to be lined up like that, but you need 3 of them in a row. Okay, so it could be like this. That's 3 in a row. See that? But they're not together. That would be an example of 3 in a row. That would tell you that this bar is safe to buy. Okay, so 3 blues in a row, and generally, the next blue will be, the next bullish signal will be safe to buy. Now, the exception to that is if after the blue, to triple blue, if the pivot that developed before it, right here, actually I think it's before the last one, so in this case it'd be this pivot right here, right, that low, since it was the pivot before the last blue one, if wait, or is it the pivot after it? Let me think about this. No, I believe it's the, we'll double check. It might be the pivot after it. That's why I'm doing these journal entries, because it's a little bit confusing. If we have to adjust it, it will. It's either this pivot or, but it shouldn't be this one. I'm pretty sure it's this one. As long as that holds, your next bullish entry will be good. Now let's see what happens when it doesn't hold, because sometimes what happens is you get 3, right? And then this pivot right here that came before it. So there's no blue or yellow, which creates a pivot. if that pivot gets taken out by anything other than a purple bar, so he printed a purple bar below, or a bar that's not purple with a VPOC, this little yellow dash, it's also where the yellow line is below. So the yellow line got below the low of the pivot, and that bar, it printed a bar that's not purple, and it's bearish. Once it does that, this trade, now keep in mind, this did not trigger. We got three blues, and we were then waiting for a pullback and an entry trigger, and there was nothing. So it's not a stop, it just didn't happen, right? So that one's out. Now, but look what else happened, though, while we were waiting, is we got 1, 2, 3, right? In fact, the first one, single bar all by itself, well, other than this one here, but there was actually a blue all by itself way back here, right? So once we got that one blue bar all by itself, and there's nothing before it and nothing after it, it's not bearish, but it means start counting, because you might have a bearish opportunity, right? 1, 2, 1, but then we got interruption, right? So now we wait. Now here it could have also gone bullish, right? If we would have gotten 3 in a row. We got 2 bulls in a row. So we have to start over the count. If it was just 1, we would not start over the count. With 2, we start over the count. So we had 1, we now have 0. Now we have 1, now we have 2, now we have 3 in a row. Okay? With no double, what I call a series of bars in between them. 1 bar is okay, 2 is not. Okay, so that means that right here, we knew it's time to start looking for bearish entries. Okay, so once that occurred, any entry signal that is valid works, more or less. Not everyone, but many of them will start working. When will they stop working? When either a pivot is taken out in the opposite direction. So if we leave a space here, for instance, and then this becomes the pivot that's associated with that space, if we get the yellow line above that pivot on a bar that's not pink, the bear trend is probably done. Otherwise, if we get one bear, like this, one bear, and then before we get a series of bars like this, series of yellow bars, if instead we would get 1, 2, 3 blue bars, it's probably going up. So here you can see after that one, we got a series of 2. So we need a new single yellow bar before we even think about looking for a turnaround. Okay, and then we would need 3 bull bars to show up without a series of yellow bars. Okay, so we'll see if it happens. So far we're just taking the short setups. Now obviously you have to, like I said before, you have to use your chart to be sure that you're not like buying right into resistance or selling into support. That's very important. Like here, you have to have the levels on your, on here. Like it wouldn't be a good idea to trade without the levels. You might decide that even though, because the algo doesn't know where the levels are, it's just reading momentum in the profile, right? It doesn't know exactly where that like fib extension is, and even though I know to expect a bounce here, I can't really just buy it. I need momentum in the market too. But what I don't want to do is sell right there. If the algo signals sell, like on this yellow dot, I don't want to take that entry short because I'm shorting right into resistance, right into support, right? And I'm just asking to get blown up by doing that. So instead, you just skip that entry. Like you could take this one, this star would be totally fine, but then that's your target. 1289 becomes your target. Okay, so let's keep going. So we have a series of 2. So as long as this, the result of all of this is as long as this pivot holds, when you get a series like this, there's a potential that direction is going to be correct. And a third, if we get that third one, we'll know when it closes. Well, when the 24 tick closes, but we should know shortly after they get here. It may repaint because it's actually looking at a different chart. Let me show you what it's actually looking at. This is what it's actually Oh no, I think we only need one more bar to confirm. Yeah, no matter what, we will. Rather than getting confusing, we'll just need to be absolutely sure. We could wait one more bar, but it shouldn't repaint unless it goes higher. Um, well, no, this one would not repaint because it wouldn't repaint if it goes lower, and it wouldn't repaint if it goes higher. No, it should be good. But remember, that's not our entry. Even if it did repaint, I don't think this one will. This one might, but this one won't. But even if it did, the entry is not. See how that's a live bar, so of course they're going to repaint when it's a live bar. But when the bar is closed, they should stay more or less. But even if this one did repaint, it would as long as it was solidified by the next bar, it would be fine because what it tells us is that we want to find bullish entries. So it came here, so we had no trigger on that bar. It was just a regular bullish bar. So there's nothing to do. But if they pull back and give us a trigger down here, as long as the last pivot holds, now you'll see that pivot was actually right before us. So this bar's low needs to hold, or we can only put purple bars below it. Otherwise, it's bearish, right? And then since we had 3 in a row, we're going to assume it's bullish until that happens. So now we get what you have to wait for the entry signal, right? There's a possibility that this conservative momentum strategy will result in missing a lot of rotations when it just goes straight up or straight down. And that has to be okay if you want to trade it. You could have a more aggressive trade strategy in addition that might get you this entry, but realize it's not going to have a 65% win rate because it's aggressive, and you're going to need to guess a little bit with an aggressive entry, such as these blue backgrounds. Buying the blue backgrounds is more aggressive, but it does often work as long as you don't take it out with a purple bar. So there's stipulations, but there are other ways you could do it, right? Okay, so look, we got another blue. See that? We got a 4th blue and a 5th blue, right? So that means we put in another pivot, okay? So basically, if we get a bearish bar at this point, and then the very next bar is bullish, you could probably just buy it because of the fact that the pivot is right here. And since we have a series of 2 in a row with no pivot in between them, we know that since I know what the range, the length of the bars will stay the same, right? Once it hits a certain level, it prints a new one. So I can say now, that's what's nice about Renko, is I can say every single time I get a series like this, like 2 in a row, and then I get a bearish bar close, but the very next one is bullish, I know that pivot is still intact. And so I know that's an entry. So, and same goes for the other way, right? So here that would not have set up because we got no bearish bar, or no bear then bull. Here, 3 in a row happened here, right? And then series, so it tells us it's bearish for sure. Series happened here. So now first bullish bar is followed by a bearish bar. That's an entry. It also had a trade signal on it, but an aggressive signal on it. But it would be an entry even if it didn't. Based on that, you wouldn't even need an aggressive bar because just the continuation of it after only one bar of relief. If we know that once you get this much momentum, where you have a triple and a series or a triple double basically, then you know it's bullish. So any pullback that gets bought, you basically want to buy. The only exception to that would be buying into resistance. You wouldn't want to do that. But you all of a sudden, with just that one technique, would have a way to know whether or not you should be bullish or bearish. Because now, for instance, I know on this time frame I can't be bearish unless I get a third, not just a second, which is not printed yet, but if I get a second and a third yellow bar, that's the only way I could switch to bear. And then technically, I'd have to make sure that this pivot that it put in right here, that we stay below it. Because if we go above it up here, it's going to be bullish again. So let's see if we get the third one. Because then it would be look for a sell signal. and stop looking for longs most likely. Although, like I said, if there was a pivot that held and it didn't put a pivot here, you could technically be a buyer still too. But in this case, since there's a pivot at the top, see this little break at the top makes it more bearish. It's now going to be harder to get through this high because of this little pivot here. It's switched from bull to bear. See, yeah, it's hard to explain, but that's just how it works. It went blue, blue, nothing, yellow. So that is what I call a pivot or a pressure point. And so this low where the white line is was the pressure point. We got underneath the pressure point with the yellow line and it goes lower. Now we've gotten 4 in a row. So remember, now it's a series and it's a 3 with series. So now if I get a bullish bar immediately followed by a bearish bar, it's probably bearish. Like I can probably just aggressively short it if I want. Even though it's so deep in the rotation, it probably works as long as there's not a level here of some kind. But to do that, I need a bullish bar. And then I need the immediate next bar to be bearish. And then I'd want to take a look at this and be like, okay, well, am I at a support? And it's like, yeah, actually, I'm definitely at a support, right? So you'd have to decide, is this a support that I expect to hold? Kind of, it might, right? So maybe I would skip it. That's the only discretion, really, that I have is if this closes bullish, I have to decide right then and there if the next bar is bearish after this one's bullish, should I stay aggressive bear? And you can use the higher time frame to make that decision if you want. You could go to a higher time frame and say, well, what's going on the 30 tick, right? Why isn't this chart yet? There we go. So on the 30 tick, we had a series of blue, right? And the pivot was here. But now we've had a series of bears. And the pivot's way up here. And we're under it. Right? So it suggests that it's bearish. Now, unfortunately, we didn't even get the bullish close yet. So now if we get the bullish close followed by a bear bar, since the 40 tick is also bearish, I'd assume it would work as long as we didn't get a different signal here. Now, if you want to be quicker than this, and this is like, wow, we've waited 30 minutes and I haven't even had I've only had one trade. That's okay. If it's slow enough to process like it is now, you can use a smaller Renko bar chart and do the exact same thing. So this is the 15 tick. 15 T, right? 15 tick NQ. And we can use the exact same technique. We can say, I've had 1, 2, 3 bears. Now, any bearish signal, and I can get short. And then after a series of them, if we would have gotten 1 bull followed by 1 bear, it goes lower. See that? Now, these were 2 bulls in a row, but it was a pink bar, so you could probably call that one. But yeah, we got 1 bull and then 1 bear, and after a series of yellows. So that's generally, as long as you've gotten the count, the 3 in a row, you're probably good to go, even without a signal. Here you had a signal, but so then 1, 2, 3, you're clearly bearish, unless you had 1, 2, 3 bulls. So you would need 3 bulls right in a row to break it, and then the other thing you could do is break the pivot, which is this, right? That's the most recent bear pivot, where you had nothing. Break up here on a bar that's not pink, and get the VPOC, the little yellow line above this green dot, and you should be bullish, not bearish. They're going to do it right there. So now on the smaller time frame, the 15 tick, it's bullish. On the higher time frame, you can see it's not bullish yet. It's technically still bearish, looking for a pullback, but if they get a 3rd bull bar, that will change, right? So this one's already flipped. Remember, it's not a buy signal. It's now look for pullbacks, and as long as this pivot holds, I can buy a sign of aggression. It still needs the sign of aggression to occur here to the upside. And then, like I said, I'd prefer to have a location too, and we do. But it doesn't always set up on any time frame, right? It doesn't have to. It does not have to set up. But what we want here is a bull bar. Okay, so I took the star. I know I said I wasn't going to trade it, but I just want to demonstrate it. And then, oops. And I expect at least two. So I could take profits here. Right? That's what I would expect, is at least two. But if I get a third one here, I can wait. I can hold for a bit. But I like, if it stalls here, it's a problem, because on the higher time frame it wouldn't be bullish, right? So then it's really just a scalp on that level. Okay, I took a little profit because it's like it's pumping, but it's not like sticking. And I'll probably take just a little bit more if they push me again, because I got to take profit since I'm not going to trail my stop. That's just the way I trade, is I take profits as it pumps. And if it stalls here, I'm just done with it, right? But it's already a profitable trade. By taking those profits at that pump, it's already a profitable trade. Okay, so it's stalling, so I'm going to get out. It does not mean it's not going to work. It's just that it's a very small time frame. So I made 410 with that. I mean, I'm cool with that. Trading 3 contracts. So and I took one and then waited, gave it opportunity, because remember, this was on a very small time frame, right? And it might still work. It would not have stopped out until, still wouldn't have stopped out. If it gets under this, it would have stopped. Okay, it would have stopped. So the remainder would have stopped. But it got me 10 points, right? And that's important to remember. And it got 2 bars in the direction I wanted on the time frame that I was trading, and the upper time frame, the higher time frame, was in disagreement with direction, meaning really there was a good chance that this first attempt was not going to work, because when they're not aligned, it's going to run into the bigger time frames have weight. They have more players, so and more money. So you have a tendency where the bigger time frame eventually plays out, but the smaller time frame can still give you trades like that, make a quick $400, just waiting for that triple, right? Pretty cool. I think so. Okay, so now we got a triple here. See, so triple bear. All right. So now we would need to see, to be bullish, we need to get over this, and then print a bull, basically. Otherwise, it's bearish. So it's bearish. We'd be looking for bear trades as long as they hold this green line. Now the problem is that pivot is very nearby, right? So it's tight. If you want to be bearish, and you get an entry signal here, you've got a nice tight stop, right? But you'd want to wait for the entry signal, which would be a break below this, more or less. Or technically it'd be any aggressive signal short, as long as we haven't gotten above the green dot. But look, we've gotten one bear. This turns bear, and the next one turns blue. 1, 2, 3, and it can go up again. So it's on this tiny little time frame. It's just consolidating. So you remember, on the bigger time frame matters more, but you can go faster on the smaller time frame. So see how it did not break out. So it's bearish. Make sure I get that right. And we've had 1, 2, 3 bears came up. Oh, it did not technically give us a signal here, unfortunately, but that's where it would have gone. That would have been the signal here on the pivot. It just didn't give it to us. So yeah, you would have had it didn't have enough aggression to signal for me. And so I would just miss that one. And that's just something that happens. Sometimes it just doesn't trigger, right? This one did. This one didn't. So this one was also valid. But we had, here we had 1, 2, 3 at that point. So actually, no, that one's not valid on this time frame, but it was valid based on the higher time frame. Right, 1, 2, 3, and then no 3 blues. So this right here it's the same. See that? So it triggered on the 15 tick short, and it was, the conditions were bearish on the higher time frame, which is why I got out of the bull trade, right? So to trade the 15 tick or any smaller time frame, you need, first of all, you need to be fast, but you also need to be flexible with your direction. And the easiest way to do that is to just go in one direction. Just stop shorting, basically. Or you can stop longing, but stop shorting is easier. Hold on real quick. Oh, okay. Okay. For some reason, my phone's not charging. I'm trying to figure that out. Maybe I should. Hold on. Okay. Okay. Let me try to get this charging real quick. There we go. Okay, now it says it's charging. I don't know. I might have to take a break and double check in a little bit if it's not charging. Figure out what's going on. But you can see we have not gotten a triple blue. I mean, on the higher time frame, right? And if you remember, the 40 tick was also bearish. 1, 2, 3, and so this was a bear entry on the higher time frame. I could use options, which I've been doing a little bit, and like 0 day till expiration options. As long as the trend is right, it worked pretty good. Yeah, needs a little bit more focus to do that, just because like I need to use multiple pieces of. I mean, it's just a new technique. So it'll just take some getting used to. Like putting in the orders and stuff like that is just different than. I don't have like a DOM open for like options. I've got to like go in, find the right contract. It's a process. And so I have a hard time trading options quickly because of that. But I can still day trade them. I just can't scalp very well. And I want to use the bigger time frame. But you see, if you took that X right there with the diamond, your entry here is 12, 1, 10, 50, and your stop goes 12, 1, 34. So it's a little bit too big for me to take in futures. It's like 30 points is $600 a contract. Like that's steep for me. That's too much. But with options, I could spend whatever I want. You know, I could do like $75 a contract or something, right? Like it's whatever. Like you just pick the one you want. It's just realize that determines when all you're doing is having like 0 days till expiration. If that's your only, I mean, at the end of the day, it's very dangerous. But if it's in the morning, assuming it's before New York lunch, that's how you determine your leverage more or less, is how much you're spending. So if that's what you're gonna do, if you're gonna do like next week's options, then you have to be a lot more selective, because liquidity, like open interest and stuff like that, start to matter. With the 0 days till expiration, you always, as long as you're just trading SPY, you're always gonna, or SPX or whatever, or options on futures is fine too if you really want the big leverage. But it, or on micros maybe works pretty well. Then go for it. But just realize that if you're trading a longer time frame, that you have to now consider theta, and it just gets more complicated when you're sticking with the same session. Options are actually pretty simple. They get way more complicated if time's involved. If you're just getting out and getting in and getting out within a matter of 30 minutes, you don't have to learn everything about options. You just need a strategy, and it just becomes an execution technique, an execution tool. Okay, so we're trading under this low volume node here. That's what this shaded area is, and it's trying to act as resistance. You can see we've had 3, and then now we're looking to get a third blue, which would be a sign that it's bullish as long as we hold this pivot. So that'd be a shift, right? Note we got it here early. See that? We got 3 in a row. And so that one, it could have triggered you in here, and you'd need a 20-point stop to survive this, and then it would have worked. But I think that, let me see. So you'd get in, it might not have survived. 1102. You just it was too big. Yep. So that one would have stopped if you would have taken the 15. But again, the 15 tick has more. So this one will probably work. Oh wait, we got 3 again. But it's on the small time frame, so it probably won't work. But the bigger time frame is trying to develop. It's compressing. So we've got this low volume node sitting above us, acting as resistance, and then all these old apexes from overnight acting as support. And so they're just going to go steal the stops on both sides, if I had to guess. It's not going to be easy just to like rip out of here. But oh, actually, I might be wrong about that. Here, look. We're inside of the consolidation of this morning. See that? And so when we fell in here, when we fell back into it and closed down here, chances are we're going to come back to this low, almost always. But there's a voodoo range in between that's been acting as support. This is probably going to get swept. So if I had to guess, we're probably going lower. And we're gonna deal with this. If I had to, it's just based on the structure that's heavy on the top, and we have not hit the consolidation value area low on this double distribution. So filling in this zone, this area down here at like 12,060, it just makes a lot of sense. In addition, I've got 2 important levels on my SPX chart, which we cannot seem to hold. And until that happens, I'm going to be bearish. So there's that too. Doesn't mean I'm just going to immediately short, but I'm looking for opportunities on a higher time frame to get short. And again, on the 40 tick, it's bearish, right? 1, 2, 3, and then we had a set, so we've only got one. We had a series of 2, so we've only had 1 blue. So we would need 2 in a row, basically, or without another series of bears. And then we'd also need to hold this pivot low. So that'd be pretty tough. It might happen, but I doubt it. They're trying to trap this guy, but usually when it's an X with a little yellow dot like that, they usually extend lower. So we should probably be shorting here on the ups, right? When they come up to this like 12, 1, 16, 25, there'd be an opportunity for a short. And here's the confirmation of the 24 tick. We've got 1, 2, and now 3. So if you didn't know, I mean, we already knew it was bearish, right? But if you switch to bullish here, which makes sense, and then you had a series of blues. And so if you get this to close bearish, any retrace and an aggressive signal could trigger me in. Technically, we just basically need to get beyond these edges. This entire thing is acting as a consolidation range. But like I said, I have reason to believe on the higher time frame that 12,077.75 should get swept. I think they're going to go under it. So, note on the smaller time frame, we have had bulls trigger, right? So if this goes star, it's technically an entry on the tiny time frame, which basically means it's likely to come up here. There, star. So that's technically a buy, but on the higher time frame, it's bearish, so I'm going to skip it this time. But it's technically a buy. You'd have to put your stop 20 points below, and you would basically be targeting this red line. 12, 1, 16, 25 would be your target. If it gets close enough to here, I might consider taking it, like with like a 5-point stop, but I'm not going to counter the trend over and over and over again. But usually that doesn't work very well. But what you'll see here is you've got a series, so all you need is one. Now it's bearish. See that? So you could get right out of your trade. You know it's bearish right here. So now we're looking for bear setups. Right? So I'm not shorting the breakdown. I'd be waiting now to see if I can get a bear setup back up here, preferably. But as soon as you got this third one, 1, 2, 3, and as long as we hold this, we know we're bearish. So it's just a matter of finding a way to get in. But like I said, we already knew we were bearish on the higher time frame because we can't get.
Thank you. I do try.
Okay. Wow, she confused me. I don't know. I didn't even say her name. She's listening. That's weird. We did not get the yellow line above this swing high, right? So as soon as we failed to do that with a pink bar, you can basically take it short because we already had the location. right? And we know the higher time frame than this is bearish. So you could use the 24 tick and the 40 tick in the same way as you use the 15 tick and the 24 tick. Unfortunately, I did not repurchase my puts. Probably should have. Planned on it. Got a little distracted. Didn't do it. Didn't have the conviction that we were just going all that much lower faster. I thought we might get a little bit more of a lift. It would suck if I missed out, but yeah, I wanted to get, I guess we did get back into yesterday's range. I should have taken him there. Darn, I forgot. Straight up forgot. Yeah. I mean, I guess it's not too late. If it rips high enough, we might be able to get short. I'm more thinking of for a swing. But what I really wanted to go just a little bit higher. Maybe they're not done yet. But they probably are. Oh, did they sweep it? They swept the low. Okay, they swept this. See, that's what I wanted. That was the trade I wanted to take, is the sweep underneath. I'm glad I didn't take the long, though. But that was definitely the one you wanted. So the hard part about using 2 time frames is you can miss trades like here. It signaled bullish in the smaller time frame, but really the one you wanted was the bear trade up here, right? Because this was still holding. So that was the better trade. Basically, again, any bearish bar at that point, once you've rejected that pivot, is bearish, because yeah, you got. It's tough because it's a consolidation. Now I think about it. So you were bearish coming down here. They technically did get 3 as long as they hold this, but then they put in this series, and that was the pivot, right? So basically, to be bullish, you needed to get above this, and it didn't happen, and you got pink bar, orange bar on a down. So if you wanted to be sure, you could wait for the triangle, but once they picked the triangle here, it looks pretty bearish to me. But what the tricky part is that on the smaller time frame, there was a bull trade, you know, and then the bear didn't actually. Well, I guess it's a trap back in. Okay, so that's one example of a momentum, right? So I forgot that I promised I would talk about more than one. So that's one of them that I'm working with, is basically watching these markers down here, the blue and the yellow, and having them help me identify the direction of the next rotation. You need to use, you could ignore it on the smaller time frame if you're not scalping. It really wouldn't help you very much unless you're scalping very small, but what works relatively well most of the time is using a higher time frame for the direction, and then a smaller time frame for the execution. So like if this one, yeah, it's down to just one. So if we get bull here, then technically we've gotten over this, and then we'd have to get over this. 12-1-17 is where things could start breaking out. Right here. We have to get over that for the higher time frame to be bullish. Here we did get an alert that it was getting bullish. See that? But we didn't get an entry on this time frame. But what I'm saying is that once you've gotten that alert, you can usually swing down to the smaller time frame, get your entry, and get your 15 points. That's what I've been doing. It's like, okay, it looks like it's trying to go bullish. Let's go find a bullish entry. The problem is it doesn't always work opposite, right? So if I was like, oh look, bear, let's go get my bear trade, right? And I go to the higher time frame, and I look, the bear trade already happened, right? And I'd be left behind. So you need to interpret the higher time frame and apply it to the smaller time frame. So what I've been doing to keep myself from being confused is I've actually not been watching the indicator, this indicator, on the smaller time frame, and instead using a zigzag. And the zigzag is telling me basically how, like the distance, of the move and then how long it took to get there, and I can use that information to determine um, whether or not bulls or bears have control. There are a couple different patterns. This indicator here, the customized volume indicator, that's mine, so I can share the details about that one. The zigzag indicator I'm using is what's it called? It's tweaked to work with better with Renko by my coach. So I can't really share what all the patterns are for that, but yeah, I do use it, and it helps me determine if it's time to start looking for bull trades or not. Um, and so that was an early. So on the other time frame, let me tell you when it was. So on the time frame I'm actually watching it on, more or less, it's now triggered bullish for sure. So now because of that, because the zigzag has now identified that it's bullish, basically meaning we've had an impulse move, more or less, with some follow through. It's more than just it, because this is technically an impulse move too. It's an impulse move. I can't go into it. I'm not allowed to. You can come to the Trading Performer and watch us do it, but it doesn't mean that it's always going to go straight up like this. It's not an entry signal. It's a sign that I can start watching for my higher odds entries, such as the star bars. But here I didn't get a star on either time frame, unfortunately. I did get this, but it was very early. So I got this star. That you would have had to. There was a way to catch this with the zigzag. This one, but you would have had to interpret this. No, I mean it's complicated. I'm not going to go into it. But yeah, on this tiny little time frame, the zigzag is going to give you a lot of information, and some of it's going to be noise. So I'm not saying that I use it all the time on this time frame, but sometimes having the volume indicator here is distracting, because even though it gives me early entries, if I fall back to trying to say, like, rather than using the pivots, if instead I use like the 3 count, I can miss some really important trades. Like here, I could be like, okay, 3 count, and it's not bearish, 1, 2, 3. It gets me bearish here, which helps me here, right? So in that sense, it can be really good. But so for early warning, it's great. But if it's doing this, on the higher time frame, so this part, and I try to take, so now if I go 3 up, bull, stop, 3 down, and then I wait for the, and then if this would have gotten, I didn't get the indicator, but if I would have taken that, that one actually worked. So maybe 50-50. 3 up, stopped. Right? Because I'm fighting the higher time frame. So going against the higher time frame, those trades aren't going to work very well. But now watch this. Let's go back to somewhere where the direction on the higher time frame is very clear, like a trend. So if I go back to an area that it's not rotating very much, and it would have been hard to trade, so like this, I'm going to get my early warning right here. Notice here I got it way back here, and so I didn't need the smaller time frame. I could have just taken any of these and known it's bullish. This one technically is the one you want. Three blues, a pivot, hold the pivot, get the execution. That's what you want, right? That's your ideal entry. But if you wanted to, you could also go down here and say 3 blues, pivot, didn't hold the pivot, wait, right? because you didn't hold that. That pivot was not held, right? It blew it out. So now you'd say wait. So that one says you might not want to take this unless you have a higher time frame reason to think it's bullish. But then it goes 1, 2, 3 bullish. So now a pullback, okay, pivot. If I hold that pivot, I can buy pullback. Held the pivot. See that? Held this pivot. Any pullback, buy. Right? Buy. Buy. You don't get those entries here, but you get them here. 3, 3, 3. Still bullish, so buy. 1 series, right? Have to hold this pivot, otherwise it's going to be bearish. 1, 2, 3 bearish. It's bearish. Based on this time frame, I want to pull back and a pivot. Pivot, I need to stay under this. Bearish, you can enter there, but stay under that. Otherwise it's not, right? 1, 2, 3. It got above it. We only got 2, so it's series. So it got above the pivot, so it's bullish unless it gets under this. But I'm not immediately buying it more often than not. I'm gonna wait. 3 bullish. That's your entry, right? Because you already had 3 bullish earlier. 1, 2, 1, 2, 3. You knew you were bullish. Take the entry. You're above the pivot. 1, 2, 3. Stay bullish. Keep buying bull. Bull, bull, bull. Okay, they did not give us the bull entry here. They put in a pivot. We got under the pivot. Hold. Pause. 3 bears. Pivot. Stay under that pivot. It's bearish. They can't stay under the pivot. It's not bearish. What does the higher time frame say? Bullish. It's probably an entry on the higher time frame. It is. It was here too. See how that works? So it said bearish on this tiny little time frame, but the bigger time frame is clearly bullish. So we don't just sell it, and we don't even sell this. Instead, we see it as an opportunity to look for this pivot to get breached. So that little yellow dot, we needed to breach it, and then it becomes bullish. Because that's the other way to flip it. It's either print 3 in a row or flip the pivot, which they did. So bullish on the higher time frame. Dips with aggressive signal can be bought. We don't get one. 1, 2, 3. Pause. We're trading under a pivot on the small time frame, right? So pause, wait for bears, or when it comes in, look at the higher time frame and say, wait, is this bearish? 1, 2, it might be. It might, and then there's your pivot that you'd have to hold to be bullish, and we're under it. And there's a pivot you have to hold to be bearish, and we're under it. You could be aggressive there, right? 1, 2, 3, bear, right? So look for a seller on a retrace. Right there. This star becomes a sell. Okay. So that's how that works. Does it take a little bit of thinking? Yeah. It's a process. You know? It is a process. But at the time being, it's working pretty well to keep me out of trouble for scalping. And then, like I said, what I'm playing with is using the higher time frame for bigger directional stuff. I don't know why this isn't sticking with me. For higher directional stuff, so like here, getting these 3 in a row means that this pivot really needs to hold for bears to think they've got anything going on. And then if you look at the last bull one, 1, 2, 3, that was their pivot that needed to hold, and it didn't. So it's bearish. Higher time frame, it's bearish, which is why I said I wish I would have gotten my puts back, because chances are this is going to reject. And so if we get a significant retrace in here, but we can't break this, it's probably a good opportunity to short, right? Here you can see you had 3 in a row, right? So as long as this pivot holds, it's bearish, and you could just kind of keep adding if you wanted. If you want to be really aggressive, but the purple bars are probably better. Otherwise, wait for the retrace, short the retrace, unless you get 3 bulls. On the smaller time frame, 1, 2, 3 bulls, right? But we know higher time frame is very bearish. So this is probably an opportunity to look for a pivot to get busted. So this little tiny pivot getting busted probably gives us an opportunity to short. They got to do it first. I'd really prefer they don't. But if they do, it's bearish. They got to get the POC under it, the yellow line on a bearish bar that's not purple. Technically on this time frame, but we'll do it on this one. So they got to get down. They got to close this one bearish. Yep, bearish. Now basically any retrace can be sold, or you can just sell it. Purple X is a little bit dangerous, usually. Those can sometimes get retraced. I want to be a little careful here with that sell. That was a little bit weaker than I wanted to see. With there's another signal, there's another pivot here. So we'll probably get there, and then maybe we'll pause. This doesn't pass the sniff test here. The X is a sign of like a judo flip, and usually when it's got a dot it gets an extension, but if it's purple it's like, why? Purple means that the buyers were giving up. So like, why did the bears need to judo flip if the bulls were giving up? Like that doesn't match. So that has me thinking I don't want to be short, but I don't have any other reason to think that momentum wise. I certainly don't have a reason to be long. But if we can break this pivot on the smaller time frame, there we go. So if we print a bull, it's got to be a bull that's not pink above this. Okay, otherwise it's bearish. You're just in the hole, so it's hard to short. But it would have to close bearish with an aggressive signal here for me to short it. And it's really, really, really aggressive. And I don't like it. But I'll do it because the signal's valid. Sorry about the jet. So this might stop. Like I don't know if it's gonna work. It's a smaller time frame entry with the higher time frame trend, but with signs of weakness. Now 2 of them on the higher time frame. So like it might stop. Okay, we did get to the second pivot. That might be all we get. So want to bail out on this. I probably should. Now they busted it. Now they busted it. They got it. Oh, I guess I could have waited to get break even. See, now they busted the pivot with a bull bar with a VPOC above it. I could have waited for break even. That was my mistake. But I knew right here the likelihood it's going to work is very low. The bears just got stuck. It was, like I said, it was very, very aggressive. I didn't necessarily need to take it, but since the pivot was here, the pink bar and the orange bar is usually pretty good, but it was weak coming into that second pivot, and they're trying to absorb off of it, but then they got a bar above the pivot. So the bulls have an opportunity here. 1, 2, 3. Oh, that's very small time frame. The bulls have an opportunity here, as long as they can hold this. I guess I could have held the short. Damn. Yeah, I assume it's going to bounce. I just didn't think I'd get into profitability. I thought it was just going to rip. So I didn't even take I didn't take a full stop. It was I entered here and exited here. So I lost like 7 points. So it still sucks, but like Not that big of a deal. But I'm a little irritated that it could have gotten me out profitable, and it did not actually stop. So had I just been a little bit more patient, it would have actually worked. But see how stalled it is. It's because of this higher time frame. This doesn't this is suspicious. Buyers are giving up, yet sellers need to like maneuver in a way. They're like they're like taunting is a good way to say it, right? And they don't do that when they shouldn't. I don't know. It's hard to explain. It's hard to explain, but it's a little bit how like when someone is like confident and they taunt the other side, right? And that can either mean one of two things: either that like they're like relaxed and ready to go and they're just gonna like pummel them, or second is like they're totally overconfident with their guard down. And the purple with the X, it tells me you might have you guys are taunting, yet you're not actually doing any work. Buyers are just giving up. So like it's probably not going to keep going down, right? But I a lot of times it's just it needs a break. It needs a rest, and it doesn't necessarily stop, right? So if you get in here, what I probably should have done is waited for the retrace and shorted the retrace with like a 5 point stop. That probably would have been the smarter thing to do, because then when you're wrong, you lose 5 points, but when you're right, you actually make the 20 or whatever. Because otherwise, knowing that it's probably not going to work, it probably makes more sense not to take the trade when I see little hints like that. The reason I took it was I'm trying to practice being systematic and just taking the trade when it sets up. Um, and I don't have that in my plan, that if it's a purple X or an X on a purple bar that I shouldn't that I should do something different. It's not in my plan, so I was just trying to execute my plan. But yeah, it looks like maybe that should be in my plan. That's what I'm trying to say. Okay, I'm gonna take a quick restroom break. We're right at the VR, the voodoo range level. If you want to try to short this, you can. I'd prefer to get it shorter from higher, but it does look bearish, no question about it. So like that technically is a bearish signal, right? And now we've kind of sat here for a bit, so I don't mind at all. And look, you got the triple, right? You've gotten the triple here. I don't mind shorting this and putting your stop up here. I don't think it's wrong at all. It's just that you're deep in the hole, and you're asking the market to drop like 2% from here, if you think that this is a good place to short, and it might. It absolutely might, but that's what you have to believe that's possible. If you believe that's possible, it's a fine short, right? The VR on the retrace, right? It makes sense. But we just had a 2% down day yesterday, and the price action is not like, I don't see any fear at all. So what I think is happening is they're just trying to sweep the lows to collect enough shorts to squeeze it out of here. That's what it looks like to me. So I'm going to go with my gut and just skip the shorts for now and wait for it to set up long, and then eventually short it from a little higher, maybe with options, because I do think it's bearish. Um, but I think they're going to try to squeeze them out. So let me go quick, get a new drink, restroom break, all that. I'll be back in like 3 minutes, guys. Can't quite break my fast yet, but we'll watch the close. Why not? I'll be back. All right. So we're trying to break out of here. Now, keep in mind, on the higher time frame, right? We are like we're near the bottom, you know, of the range. So on the higher time frame, this is the low put in today, and that's where we are, right? And so if we take the volume profile, if we draw the volume profile for just this consolidation period here, before it starts ripping out, what you'll see is the VPOC for that is here, and the volume area, where there's 70% of the volume, is, I don't have it marked on here, but you could. I don't have it marked, but I believe it's like, let's say from like here to here, let's say, right? So that's an estimate. But you can see they tried to bounce off that general area. They bounced off the VPOC, right? And then if we jump in here and we look at it on a smaller time frame, it makes sense that that's where the resistance is. But generally the rule is when you get back into a value area, no matter if it's a daily or a consolidation range or micro composite or whatever, if you get back into the value area and you spend some time there, usually you're going to go to the other side. And so that's what they're doing. So that the target for your bull trade would have to be that high, more or less. But since we're since we bounced off the VPOC, we basically have to leave this area immediately. Otherwise, the likelihood that we're going to go all the way to this low is really high. The VPOC is acting as support for the moment. And you never know. It can just rip, right? That happens. But generally, the longer you stay in here, the more likely it is not to rip out of it and instead to go the other way. And you can see that we haven't really we haven't spent a whole 30 minutes in there yet, so it's not a foregone conclusion. It doesn't have to foregone conclusion, but it might. And we have to be prepared for the fact that it might. We can also look at ES and ES is below the morning's low, making it harder for NQ to retake, to rip out of here. Because if ES can't, let me put it this way, if ES can't take back today's low, which was after the opening range, by the way, so it really needs the opening range low, which is right about 39.9275, where the voodoo range level is. If you can't take that back, it's almost certainly going lower. But if they do take it back, then since NQ didn't break the low, the bounce can be pretty significant. But I'd say what's more likely is that they both get under today's low and go lower. But you never know. You never know. And like I said, this was suspicious. They did sweep underneath it. They found buyers. It quickly responded after getting under it with lots of volume. Right? And then we're just waiting here. We have not gotten any signs on this time frame that there's any bulls setting up, but it did set up on this time frame right here. 1, 2, 3, bear, pivot, execution, long. So we got the bear in there, and that gives us the little immediate lift. That helps. And the pivot held. Right? But we got a bear signal here. 1, 2, 3, pivot. But technically we needed a bull in there too. So this would be the pivot they would have to hold if you want to be bearish. The next pivot. But in the meantime, we got 3 bulls and then a pivot. Right? So if this pivot holds, basically if we trade above this, it's bullish. If we trade below this, it's bearish. So all of a sudden it's all the way down to like the range of like 5 points. If they can push up above this high, it's going to go higher. If they can push below 12,083, it goes lower. So this becomes the breaking point, or what I call the pressure point. Now, putting pink bars up there is not very helpful for buyers. That's basically price rising because sellers are pulling their orders out of the order book. So price can advertise up there, but if there's nobody really doing business up there, it doesn't really count. Now someone started doing business up there. Someone actually bought it. See that? Now more people are buying than they are pulling, so that's going to turn white if it closes bullish. And that would be like a moderately aggressive bullish bar. So okay, so we're clearly bullish now, right? We're definitely above the pivot. So now pullbacks can probably get bought if we get an aggressive defense of any of this zone. So if we get a pullback now, which would be welcome, especially if we can hold this pivot and bounce, that the same area will become buyable. But the problem is the pivot is very high. It's way up here. And we can only put purple bars below that. Otherwise, it's like immediately bearish. Because that's support. This has to be support now. Doesn't mean it won't work. ES is testing above the VR level. So that alternative view might actually play out. They may retake. They've retaken it. So if they hold above that, we may not. This might be the low. That would be funny. But it basically just has to rock it, which would suck because that means I'm not going to get set up. But if it pulls back and then bounces immediately, I could probably take an entry. The only problem is if you look at the actual indicator, see how it's coming back through the zero line after going really high? It needs to immediately bounce. Right? Now that's in the very small time frame, so there's that. But seems crazy to buy it, but technically, it can be a long if it closes bullish here. But you're fighting the higher time frame, and you're buying a breakout on a bearish trend. So, of course, if they don't close it bullish, then there's no setup at all. If they do close it bullish, I technically need a sign of aggression. But that's certainly not much of a pullback. It's basically a breakout trade. Because the only way they can break out of here is if they have ultra strong aggression. They don't have it. See that? They can't do it. So if they can't break that out, now that's a purple bar. So bulls still have a chance if they can retake this right now. Because now they've got only a purple bar underneath the pivot. These little circles are the potential pivots. Oh, they might do it. ES has given up that level again. So again, it's questionable whether or not they have the guts to be buyer here. Who wants to have the guts to buy it off support like this? I don't know. If there's no interest, it's dead. Yeah, that's not looking good. That's why we wait for the aggressive signal before we follow them in. And we're not going to try to guess which one is going to work. But if they give us an aggressive signal here, it's technically long. But remember, this is a very small time frame. Okay. Looks like they're going to... if they close this bearish, it's over. Okay, looks like they're going to do it. trying. No. Okay. Oops. Okay. So yeah, they closed it bearish. It's not bullish, right? So yeah, bearish, right? And that makes sense. Higher time frame also bearish. So we're gonna, and we got 3 in a row. So you could technically take that green dot, but I would prefer a pullback into it. But it's clearly bearish now, if there was any question. And then if you look, we're just sitting at that today's lows, right? Okay. Looks like I've got a coaching client that I've got to work with after close. And I've got to prioritize that over my free stream. So we'll go for another 30 minutes. I was going to do some review and talk about a couple other momentum strategies, but that's okay. Looks like I said, I've yeah. While it might be fun just to do live trading and stuff, it's it's important that my team's survival and thriving is more important than that. So yeah, I would rather help out, even if it's just a one individual person. um, I think doing one-on-one coaching is really useful and worth the cost personally. And to demonstrate that value, I'm gonna put aside things that I might do more for recreation, and give people the opportunity to learn one-on-one. I think a lot of people learn better when there's some accountability, So I know my trading changed a lot when I started getting coaching, and I find coaching really useful for me too, but it is time consuming, so that's why there's a cost. But if I could get the time back, it wouldn't cost anything, because I actually kind of enjoy it, but it is time consuming. Okay, wow. So they're gonna push this. Like I said, it's the end of the day. Like, you never really know what's gonna happen, but that was a bigger response than I expected. We're basically ripping back from this previous zone. We weren't. If you look at what I posted on Twitter, we weren't able to stay underneath this consolidation, right? The second consolidation or third consolidation low, the value area low, acted as support, and we bounced off of it. So the likely target is up here now at 12,110. So, and then in fact, we might even get all the way back up to this top one, because these are all being treated as one. So 12,142.50 again, it might be where we're headed. Back there, that makes sense. So, and then if you're brave, it did tell us to look for longs, right? It did tell us 3. This is your pivot. Look for longs, and it triggered with the star or the green bar. Same thing here. 1, 2, 3. This is the trigger. It never. Now it did give us 3 here too, right? But it never broke this pivot. It never broke this pivot. The hard part was it broke this pivot. So that's where I got thrown actually, because it said, and that was right on this tiny little time frame. This pivot did matter, right? We got a big flush as a result. But on the bigger time frame, like this pivot was taken and it became bearish here on this time frame. Actually, now that I think about it, that pivot got taken, so that was bearish. But this pivot did not. The last pivot on this time frame was all the way back here. So on the bigger time frame, it was just a pullback on the bigger time frame. Cool. But now we're into resistance, so let's see. Oh, we got a red. Both time frames got red. Okay, so the dots here, usually when you have dots right after each other, and this one got an X, it usually goes higher. Usually. But not always. Oh, they got, yeah. And then dot X with no dot usually does not continue lower. So this is an unusual pattern here. Well, the result is unusual, but having them back to back like this, these two bars are basically the inverse of each other. You know, except this one didn't have the dot. It was late. The dot came late. And that's usually bearish. The dot coming late is bearish. So by this point, you know something's up. But here, it looked like it was bullish. See that? And there's nothing really here that said, don't be bearish. I mean, don't be bullish. Except perhaps for the fact that we didn't get a dot here. And when it comes in here, it's like, oh shit. And then it drops. You know what though? We didn't get a dot here either. And that was also the pullback. There actually might be. And then look, these pivots didn't get the dots. They didn't show up late either. And those ones all held as well. This dot came really late. Yeah, and you know what? That actually kind of makes sense. But I think what we would need is you would need to see a yellow dot to the left if you're bearish. If you're bullish, you'd need to see a yellow dot to the left of your pivot with no blue dot and then break above that. And so here you need to have this blue dot. Perhaps with a purple bar and pink bar. Holy shit, that actually might be a good pattern, you guys. That might be worth looking into. Let me see this. Okay, I just now noticed this on accident. Okay, let's see if it works in the higher time frame. So what we need, so here we didn't get it. We've got no yellow dot, but we do have a bare pivot with no yellow dot, but there's no blue dot to work off of. So there's nothing on this rotation that the pattern did not show up there. This one did not get a blue dot. A green dot's something different. It's got to be a yellow dot. So that one did not show up. There's the yellow dot. Okay. So now if we get a pivot with no blue dot and we get above the yellow dot, now it's not going to print until this prints. So we might not get it, right? It needs to be bearish. It prints on the bar before it. But if it's bearish here, it'll probably give us a dot here. So if it's not bearish, then we don't have the setup. At least not the one I was noticing. Oh, we might have it over here. Yellow dot. Yeah, we have it here on the small time frame. Yellow dot, pivot with, so it's saying what I think might be true is if this is a pivot, now it might not be, that it's probably bullish. But they have to hold this, right? But on the higher time frame, that won't be. It's basically just an entry signal, is what we need. Well, it didn't quite print. I didn't get the pivot. It's got to give me the pink bar on the right. I need a pink bar to break over that yellow dot. Sorry guys for the noises. It's just a coaching client giving me some info. So okay, I will take it if they give me the pink bar at 70. I'll take it at 80. Okay, if they trigger 80 here with I'll take it. Oh, it's not gonna be pink. Maybe I shouldn't take it. Okay, well they already got it. So I'm gonna see if I can get 2 bars. Nice. I think this pattern might actually work. Look at that. I don't know how good it's for. I don't know how long it usually extends. But yeah, I just got 10 points on it. Let's see if I can get 12. Maybe I should just take all here. I have no idea how often this works. It's literally a brand new idea that I just noticed like 5 minutes ago. Should I just... I think I'm just going to take it all here. I'm pretty happy with how it's going. I think if they pump again, I'll just take it. Let's just let go. I'm happy. I'm happy. Dude, that's cool. Okay, hold on. Let me see what my client needs. Maybe I might have to... We'll have to see. This is kind of exciting. So let's see what we can do in the next 30 minutes here. But that's cool. That's an okay day now. Suddenly, that was a good trade. That's interesting. So okay, so what I saw, yellow dot on something other than a pivot, right? It wasn't a big pivot. It was like a drop or whatever. It was mid rotation. Then we got what looked like what I believed was going to be the flag pivot. Remember, those are delayed, but I can tell because it's the swing low, right? So if this low didn't get taken out and we printed this bar, I felt pretty confident that we were going to get an up rotation on that time frame, which we did. But now we've gotten the blue and a bear rotation. So now it's probably going to go lower if this works in both directions. It may only work with the trend. We're about to find out. Because if this works here, then it probably works in both directions. If this fails to go lower, and right now it looks like it might, because it's triple blue, I don't know if it's going to or not. But it would have been, this blue bar would have been the purple bar would have been the short. I just don't know if it works counter trend. I guess this was kind of counter trend. Maybe this one's more likely to work. Hold on, let me see. On this time frame, I think it's bearish, yeah? I know on the higher time frame it looked bullish, so it might not work. So maybe it can only go in the direction of the trend based on the time frame above it. Yeah, so this one looks like it's going to fail. And that probably means that that's a good entry. Is that a good buy when it gets a blue dot now? Blue dot pivot creates a blue dot. Is that now going to be a pullback long? I bet you it is. Why not? Let's just, oh, they're not going to fill me. You bastards. Damn it, they went without me. They're not going to fill me. I was trying to get filled on a pullback because I actually think this might break out. Oh, there we go. They filled me. I don't know if this is a good idea. This is like, I'm guessing now. But since I got the blue, oh, fuck. Nope. That's going to stop. Almost stopped me. I thought maybe I saw something else and I just kind of took it rather than which isn't so smart, but yeah, they stopped it. Okay, that sucks. That sucks. Okay, that was a mistake. So, because it was a different setup. I thought I saw something else. I thought if it failed, that yeah, I don't know. I thought something that wasn't true. So that's interesting though. So this one failed. Dot, pivot with no dot. which should have been short, right? But it didn't give us a signal. And so it took it out, and then it gave you the dot entry. So it trapped back in. So that was a short, not a long, because of the trap back in. And I said it, I was like, uh-oh. When I saw this trap back in, I'm like, yep, that's probably not good. But I didn't know what the sequence was. Okay, so this would be a long then if they print it with no dot and they continue it later or further. Oh, and I wasn't watching the 24 tick. This was an obvious. This didn't make sense either. Okay, now they got to print the triangle, and then it's bullish because it's dot, and then it would be a pivot. Nope. Does not look like it's going to be the pivot. It's got to now print 2 more bull bars on the right for it to work. Oh, it's printed a dot, so I believe it's out. I think that invalidates it. I think. I don't think it can be bullish anymore because this is definitely not gonna be the pivot. Well, it technically could be if it has a higher low though, right? If this doesn't go bearish and it just rockets and traps him, but it's got a dot in the way now. So now I'm not sure what to do about that because it's dot, pivot, dot. I think it's usually just gonna break down. Yeah, and it looks like when it doesn't work, you have to take the trap back in. So sometimes it'll be the safer trade is probably wait for the trap back in. Actually, that's probably the better short with the dot. And so now everything's bearish. See triple, right? So that's technically a short. Pullback short. And remember, I said one bull followed by a bear. The problem is it's a purple bar with an X, so it's a judo flip on a bar that shouldn't need a judo flip, and that's usually a problem. So they're probably just going to mess with it here. It does not look bullish though, does it? I just kind of doubt they're going to save it again. Because look, now we're back underneath the value area of this big zone. So if they hold down here, it's going to go to the lows, right? And we knew that bounce wasn't very strong. I did. But we're back in that value area now, so there's a very high likelihood we're going to come to 12.044. Very high. And so that probably makes this and this a better short. I hadn't thought about that. This broke us back into the value area of that consolidation, making that a really good short. Shit. That was a mistake to buy this. I was thinking the exact opposite. That we confirmed out of it, and that might have been a good entry. Because I identified that it was probably going to fail because there was no aggressive sell here. So I was like, you know what? I was just getting fancy, and I was like, maybe since they're going to bust it. At least I thought they were when the dot showed up. It's like chances are going to bust this, so maybe this is going to squeeze. But there was no actual evidence that it was bullish. That's the problem. It had the 3 here with the pivot, right? So you could do it, but it's very aggressive because our pivot is here, and we basically tried under it with a purple bar, and we're buying the breakout. So it was very aggressive, and it was going counter trend to the higher time frame, which is a no-no. So I think that's the primary thing, is that I got to make sure that I'm going with the trend of the higher time frame. Okay, so they're trying to say this again. This is probably not going to work, but they've got this purple with the X that doesn't make a lot of sense up here. So I'm not surprised that they would come back. This is probably a short, is what I'm trying to say. Let's just go ahead and take it. Why not? It would have been better to short it up here, but that's the entry. It's another X that's purple. I don't know how I feel about those. It doesn't make a lot of sense to me to see that at the breakdown. I don't like that at all. I don't know. I think it just means they're not going lower. It just doesn't make sense. They need a real seller to come in, and there's nobody there. It's just weird. Like, maybe it's the start of a really big drop, but probably more likely is it just rips. Like, it might just squeeze on me. But I'm in the trade now, so. But I don't, the only way this makes sense as a short is if it's going to totally get like price has to get annihilated here, and I don't think that's gonna happen with the purple bar with an X. But like I said, it's valid, and the last one that was valid did work. So like it just I'm not sure how to interpret it. But it's valid, and I think it's probably gonna stop. Yeah, of course. This one's gonna stop, but the other one didn't. Let's see. Yeah, and see, there's the dot and the yeah. Let's get out. So dot. Now it's bullish. See that? Damn. That's frustrating. Dot. That's our pivot, right? And then we got over the pivot with pink bars. So now, based on that, as long as this dot holds, it should be bullish. But like I said, these purple X's are, I think, maybe 50% as like entries. Oh wow, are they going to drop it now? They trap back in and then they drop it. Is that how they deal with it? I just don't know what to do about this because I know it's not strong. I'm gonna have to research that because it doesn't make sense to me to see that at the breakdown. It's a sign of weakness. But yet the bulls aren't doing anything when they lift it. So that's what's got me confused. Is last time it actually broke down anyway. And then this time my instinct is right. And it just doesn't have any energy to go lower. But last time I went with my instinct and I missed the extension. So I don't know what to think of it because I'm just choosing the wrong adventure here. But I think last time it needed to consolidate and then it worked. So let's see if we can. We don't have any signs that it's bullish. So I think what we still need is basically a bearish setup, which would be here. So let's go ahead and take it and see if it works this way. See, now we've waited for the consolidation and they're confirming bearish to me, I think. Again, it's a very small time frame, so there's lots of noise. So let's see if this one breaks down. If it can get broken down, it should be pretty severe, you'd think. But these guys got a little trapped. They got overzealous. Let me just check on ES. Yeah, ES is fucked. There we go. I got one. 10 points. Let's see if I can push the other one. Because I feel like the only way that trading this aggressive is worth it is if you think it's going to go, like, a lot lower. So, like, if I can get, like, 40, like 1240, like, if I can get down here, it's totally worth it to do all that stuff I was doing before. Where I'm, like, aggressively trying. If I don't think it's possible to get to 40 or lower, you really shouldn't be trading that aggressively on this tiny little time frame. Like, if you think that this is the support, there's no reason to take these. Right? So it's a little Machiavellian, but since I was being the only reason I was being aggressive was that I thought that ends justified the means. So I can't stop. I'm not going to stop doing that now. You know, I'm not just going to change my like entire plan to the higher time frame just because this lower time frame like stopped me out once. The problem is we're 5 minutes from MLC, so like it's the end of the day and anything can happen. They can just squeeze out of here if they want. And if they can't close lower, that's exactly what's going to happen. But you kind of have to live by the sword, die by the sword. Like if I'm gonna be bearish, it's because I think it has the potential to go a lot lower. It's just not showing any momentum at the lows. Nobody's participating at the lows, even though it looks really weak. And that it's frustrating, but it just means it's not ready here. It looks like now it should break down right into MLC. 5 minutes into MLC. Maybe they'll give it one more try. They're probably going to rip it up and then roll it over. Like I got to ask myself, like, how many times am I willing to waste to give away my runners? You know, like you do have to kind of have a limit, but at least I'm getting the core off, you know. But if I can get the runners to run, that would help. It would make back all the scratches, that's for sure. But see another purple X. And yeah, it's just not ready. It's just not ready. If it's a purple X, I'm just gonna assume it's not ready. It's a purple X here too. It's just not gonna do it. I think I just have to accept when I see that it needs more time, more often than not. And since the higher time frame was a purple X, I think it's just, I probably could have taken profits a little lower, but a win's a win, and I already got filled with 10 points. So at least I made back half of the stop, the 2 stops that I took. They were small, but yeah, see how these purple X's get buried? I'm going to look into that. Now, if they break it down again, it can probably be a short again. But the problem is that the smaller time frame needs to rest too. So it may not work this time. But we got triple. So three yellows. So to be bullish, we need to hold this to be bullish, right? The pivot, and we need to break above this. Otherwise, it's bearish. But we would need a VPOC on a non-pink bar that's bullish above this. So this bar being bullish would do it. That would potentially spin it. And see what the indicator's doing, how it comes down near the 0 line and bounces? That's usually a reversal. They might actually squeeze it here. They have to close it bullish. But if they do, they might actually reverse. That would be very wicked and cruel to all the shorts, but they've been signaling it all day that they want to bounce this. They just can't seem to do it. But if this closes bullish, it should actually squeeze. It's technically not an entry, so it might not squeeze immediately, but it probably means that we're not going much lower for the time being, and they're going to try to go higher. It might just happen immediately. Like they might just go, but if I get a long down here, technically I could take it on this time frame. No, unless I got underneath a pivot. Ah, they put a pivot up here. Shit. So this one had no dot, right? No yellow dot here, but the blue dot before it couldn't get taken, so it's not bearish. That looks like that's how it works. And this is probably just going to rip. Blue dot, pivot with no dot, right? No yellow dot. So now it's probably bearish. And I thought that the blue dot might invalidate that, but it doesn't. You just have to get under this blue dot. And that took 2 tries. And so it got trapped back in. That was your high odds entry here. And you get the scalp. On the higher time frame, it should work as well. So here, this one didn't have a dot. This one had the dot, so that's something else. I don't know where the pivot's going to be, but if it's here, it's dot pivot. If that pivot holds and you break above that dot, any long signal should be valid as long as this low holds, which is like that consolidation zone's point of control. Okay, they come right back to the point of control, and there's an iceberg there. Wow. They do. Someone really does not want this to go down. And if they get beat, this could be explosive. Okay, purple bars underneath. They're going to try to retake it. Sellers are giving up because they expect it. Nobody's following through. It's probably going to reject. Okay, there's a real buyer. Now they can trap them. So let's see if they go up and then they trap the buyer. We have a pivot with no dot, but there's no blue dot to work off of really here. So I don't know what to do with that. It didn't actually get a pivot side. This one did. An apex. That's the word I was looking for. So the apex is here with a dot. So that's something a little different. This apex did not get a dot, but there's no yellow dot up here to squeeze. Yeah, there's just no interest in selling the low. So they're just going to retrace all that. But look how the sellers are weak. It's just pink bars. Nobody wants to sell into the low, but no one really wants to buy it down here either, apparently. Very low participation. is what I see at the lows. So we're gonna reverse and probably head back to 12,142. You could try to buy calls here. I mean, it is dominant at the moment to the upside, and there might have been. It tried so many times that there might be some stuck shorts if we do actually rip out of here. I don't hate, like, I don't know. I kind of want to do it. Like, just give it a try. Like, see if you can get a decent retracement, because it looked so sure that it wanted to go lower, and it just couldn't do it. So now basically any retracement you could buy, like tomorrow's calls. Here, I'll do it. Why the fuck not? Just like buy tomorrow's calls, and let me sign in real quick on my phone and see if you can see if you can get a rip into tomorrow. So we can use QQQ. I really do want to retrace. And we want to trade options, a single leg call. And we basically want it to be tomorrow or Friday. And we'd be looking to spend no more than. So I'd be looking at like the 296. Or maybe the 295, like slightly above. So I'll get one here. And then if I get another, so I'm filled for one. And then I'm going to, if we get a bigger drop, I'll fill another one. Okay. And we'll see what it does. So I'm doing it with options because it's the end of the day. And I want the choice of holding it overnight in case we squeeze like crazy. But I bought options in this candle, in this bar, identifying that there's a generally high likelihood that these guys are getting trapped because there was no interest down there in going lower. And so these retraces into this area are probably going to get bought. And as long as that low holds, or we find buyers below it, it's going to rotate higher before it goes lower. It might not go very high. That's the trouble, is that there is resistance. But I think 12,150 is totally doable. And I mean, that's 60 points. Like, that's worth it. Now, like I said, I'm using Fridays because I don't know if I want to day trade it or not. It depends if I hit my target. And if I don't hit my target, I want it to be cheap enough that I can just hold it tomorrow and have a chance to like triple the price if I caught the bottom. But if I'm wrong, it's going to basically go to zero tomorrow. And so you don't want to risk, I don't want to get 10 contracts personally and risk like $700 on that setup, because otherwise I might as well just do it with futures. All right, so the trade is working. That's a good feeling. All right, so we're getting another dip. And again, if the way you would do it is you would decide ahead of time how much you're willing to risk. So like at $80 a contract, like maybe I'd say like I'm willing to risk like 5 times that, right? So I might buy one here, and then as they pull back into here and they start to turn, maybe I buy 2 more, right? So now I'm at 3, and then if they sneak under here and pull back, maybe I buy my last 2, and then if they take it out, you just, you're out, and then you don't lose the full amount. But if they rip it, now you've got 5 on, and worst case scenario, if they roll it over overnight, you would you just lose the price of the premiums, right? Like that's your highest cost. So you have to decide ahead of time how much you want to risk, especially if you're holding them overnight. But what I'm really looking for is a little squeeze out of that area. And again, our smaller time frame told us to watch out here with 3 orange, yellows, right? 3 bears in a row. Says that if we can hold, we have to get below this pivot, and then it can get bearish. So if they take this low, it's saying, sorry guys, it's saying you can start looking bearish, but you can see we got 3 buyers here, and that pivot has not been taken. So it's consolidation until it's bullish or consolidating until we take that low on that time frame, right? So if you wanted to short, you're looking for a short from up here, but really the pivot that developed here is not, we're not below it, so it's not bearish on that time frame. You'd be going back and looking at this 3 series and saying, here's my low that needs to hold. We tested below it. That would be a long. If it wasn't 3 minutes to the close. Or you could use options like I did, and then see if you can get a squeeze. Now the options markets for the ETFs are open for 15 more minutes after the close, so they might squeeze it out, and then I can just take it as a day trade. Otherwise, I will just hold it, and there's totally a chance that like I wake up tomorrow and it's worth like 10 cents, right? Like that's totally possible. But with one contract and risking a whole $85 or $80, it's probably fine to just leave it. And if we happen to totally squeeze back into yesterday's range, that contract's gonna be worth $2, which might not seem like a lot, but like considering my max risk was $85, yeah, if I can make 150 on that, keep doing that. Whatever. If you find something that does the triples and doubles on a regular basis, yeah, it's probably pretty good. So see how this squeeze? That makes sense now, hopefully. Okay, so there's our. Sorry, that was probably loud. There's our bell. Let's see. So like I said, my primary target's 12,142.50 because it's the top of these 3 consolidation areas. See that right here? It aligns almost perfectly with this one. So if it's neutral and we got back into the value area of this consolidation range here, then it's likely going to retrace all the way to the other side of the value area, which is here. So if I take, for instance, a volume profile tool and I take it from this to the current level, you can see that it lines up to 12,125. So that's the very least I should be targeting. Basically, we retrace this entire red candle. But then you have to ask, if we retrace that entire red candle on the bigger time frame, what is that saying? And so then you can say, well, on the bigger time frame, on the bigger time frame, once stuff started to rest, you can see that we spent less than 30 minutes underneath it. We got a close underneath it, but didn't put a full 30-minute bar underneath it. And then immediately came back and tested above it, right? Got stuck in this pivot, came back down to try to rush it down, but we couldn't reach the low. On ES it did, and then it regained it. But you can see we had one bullish bar underneath it, but no bearish bars with the open and the close below it. So just like over here, when there's no open and close below it, it goes back to the value area. Well, that's what happens here too. It's going to go back to the value area. So value area high, I mean. So most likely it comes back to 12,142.50. Not rocket science, right? Shouldn't be. Should be pretty clear. Now, it's different once we've retraced that. The process for determining where to target, assuming we reach this, knowing what to do next is you have to have another process for that. It makes sense to stall here because it's the value area of these two consolidations. See that? So this is a very normal place to get kind of stuck for the settle. And then overnight, we probably do something in here, and then either break out, in which case we're coming back up to like the 1223 area probably is where it would head next. Otherwise, it'll take this whole thing. That's also possible. If it's going to be an impulse move, because on ES, it's going to look here. On ES, this is going to look a lot better. Look. It's either going to do that or it reverses. And that's probably more likely here. Let me show you on ES what's going on. So we could do the same exact thing on ES, because this is 30-minute of ES. Hold on. Real quick. Oh, no, we're good. Okay. So check on my coaching client. It sounds like we may be getting together later. So, okay. So if I start here, right, and take the big one, if I say that this whole thing is consolidation, you can see that ES was unable to close up, or even really, to close or certainly spend any time below the value area low. If we see this as consolidation, and that the value area high of that whole area is 4,950 or so, right? But there's this big anomaly in the middle, highlighted by purple, that probably acts as resistance the first time in, and it certainly could then come down here and take out the low, right? Like that, there's no reason to think that this bigger time frame is bullish. So then let's take this and let's look at the bigger one, right? So if this entire thing was seen as consolidation and a test below, you can see that we got underneath this low of the day and we closed the bar underneath it, but that all the rest of the bars were bullish closes, and that now we close the day back inside, right? So as long as that occurs, we would expect this to be reached. 40.1625 would be likely to be tested, assuming we don't immediately reject out of this area, right? Now that we're into it, we need to stay in it. Otherwise, it's bearish. So if we can get through this anomaly and settle in here, we're probably going to head up here, or at least to the point of control. 40.10 would be a very natural place to rest, would be 40.10. Okay, so if we get, but look, if we get here, and now we go to our smaller time frame, now that we know that, on the smaller time frame, we have multiple consolidation periods. So like, there's one in here, right? And we could say that this basically went until here, let's say. Or we could even spread it a little further and say it, technically it went till here. If you want to count all this as consolidation. Well, we're already inside of that, no matter how you draw it, right? I drew it as conservative as possible, and our value area low is still all the way down here, and we're into it. But only for 6 minutes. So that is probably an important level to hold, and you can see that it rejected off of it right here the last time. So that's where that high came from, swing high. And if we stay in here, where's the high on this? Well, it's right at 4,000, same spot, right? 4,009. So 4,009 becomes a very important part. But look, our point. But look, this is also consolidation, right? It spent some time up here. See this? That's technically all consolidation too. So you could break them up, or you could say, well, it definitely broke down here, right? So if this is where the consolidation, oops, I did one extra box. We don't want the breakdown. So if this is our consolidation, the value area low there, right at 4,750. That's probably also a very, very natural place for it to reject. And those line up though. They line up. See that? And you can see that when we got underneath this, but couldn't close underneath it, what happened? We came back up and tried to retrace the whole value area, got stuck around the point of control and rejected. We never hit value area high here. So this becomes a very likely target as well, 420, if it's bullish, right? So all of a sudden, and then there's another one down here. You do the same exact thing. Down here, this is basically where we knew it wasn't bullish anymore, or bearish anymore, and then it broke out right there. So we'll say it's these, to be as conservative as possible. You can draw wherever you want, but that's how I interpret it. Okay, and you can see the value area high for that was basically right at the voodoo range level at 39.9275, maybe 39.93. And then the low, you can see we got a close underneath it on the 3-minute chart, right? But it couldn't put even a full 3-minute bar below it that's red, and mostly just wicks. And when it couldn't get underneath, what happened? It went right back to the value area high of that consolidation. It then tried to come back. It could not reach the point of control, and so it ripped. Right? So if this fails, our most likely support, since it wasn't reached on the first pullback, the most likely point of support is right there at the point of control. That's by far our most likely where's the edit? Head alert template. I just want to change this. Oh, here they are. I was like, where did the settings go? So this is like our must hold support now. You can trade under it, but it should reject lower than the VPOC if this is bullish. If it's not bullish, this will get retaken, and this will be resistance, 39.9275. And I wouldn't be shocked if that's the case, right? The chart looks pretty bearish. And then you ask, okay, well then why did you buy calls? And the reason I bought calls is because the opportunity here, in my opinion, is if this holds and this rips, the opportunity is for a squeeze, because they tried to get under it and they couldn't. So right now, what I expect to happen is a pullback. And if there was nobody during the regular trading hours, we're going to probably need some news or something to push it any lower, I assume. So we probably do go back in here, but as long as this 39.89 doesn't act as resistance, it's probably going to bounce a little bit more, if I had to guess, just because it tried to be bearish and it didn't work. And then when they squeezed out of it, it went through the value area high of the consolidation, basically trapping all of these late bears. So if there's any momentum in it at all, especially after reclaiming this one, right? That's the other spot we could probably draw a line. Is right there. So this value area low would be the other spot that, like, it would make a ton of sense to bounce off of that if this was going to hold. But I think we're going to come back into this, because look at that. Look at on the tiny time frame. Look at that breakout. It barely even retraced before we got out of here. So I think it needs to come back into either 39.9275 or 39.8925. If we're in Globex and I see those I see a entry there, I would take the futures trade if it sets up to the long side. If they lose that, that's where I'd be looking to short. Okay, so since I got a couple extra minutes than I thought I did, let's go back and see if I can fix the mistake I made because, like I said, I took a couple really good trades and then I gave back some profits um, because I misinterpreted this. So let's make sure I've got it right, right? So let's do it on the very smallest time frame, and that way, I know. Um, that way, I know if it works on the very smallest time frame, then it's easy to go and see if it's working on the higher time frame. But it's a scalp strategy, so I assume the way it's going to work is it will work when it sets up on the small time frame and the higher time frame direction is correct. So give me a second. I guess I could start a new video. This one's already been going for 2.5 hours, but no, that's okay. I will. Those who stuck around will be rewarded for it. I'm gonna run and take another break, use the restroom, and pack a bowl, and we're gonna enjoy some sativa while we analyze all this because this part of now that I'm not trading, right? It's closed. The part of trading that's not very, or the part of the business that's very tedious for most people is going back and searching for these patterns and trying to see if there's consistency there, right? So we talked about what the pattern is. I'm gonna take a break. I'm gonna come back and we're gonna try to dig in and see if we can find that pattern. Now to simplify things, one way we could do. Oh, and what I was saying is that in a totally clear state of mind, it can be very tedious to like go back and look over every single scenario. So sometimes having some chemical assistance, anything that helps you focus, can be of use in this part of the business. I don't recommend if you're trading to use cannabis, but for the digging in and studying part of it and the creative part of it, not the execution, right? Not when you're actually trading, but when you're trying to find the patterns. Uh, yeah, I find as long as it's a pure sativa, I find it useful. So give me 2 minutes. I will be right back after I set this up. Be right back, guys. we are grinding some super sour diesel. Or just ground some super sour diesel. I prefer to vape. I don't really like smoking anything. So I have a little home vape that's called Air Riser Solo that I'm a huge fan of. Everything tastes better, easier on the lungs, and much like more like I don't know, like the experience is a little cleaner for me. If I'm like in a social situation, I'm all good with smoking it, but I don't like the coughing and the harshness and all that, and the smell and the taste is so much better when you're vaping. So I prefer the vape, but like I said, for many years I was smoking. I just kind of switched to vape. So let's review the pattern, right? And then what we're going to do is we're going to compare two different time frames. So what this is, again, what we're looking for is we want a higher time frame direction, which we can basically see from the direction of this gray line. But if we weren't sure, we could check with the higher time frame. Otherwise, we can just back up in this case and we just erase all these so it's not distracting. Let's go back to. So this is the 24 tick, but we'll try it on the 15 too. So because we'll just it should work on both. Remember, it's a scalp. Okay, here's a nice area where we know the direction, right? So this was bearish, like yesterday. We'll do it from where it starts getting bearish yesterday. Okay, here's the top of Friday, right? And then this is where it starts to get bearish. That's the high. Oh no, sorry. That's the high. So the trade setup, remember the pattern that we need for the short, because we'll do the short first since it's convenient. We need a blue dot. Okay? The blue dot then needs to be followed by an apex sign, one of these little flags. And that apex sign cannot have a yellow dot. If it does, blue dot, apex with the yellow dot, it's okay. It's not that it can't fall down, but I don't know whether or not you can immediately. Sometimes it won't, right? So because like here's this. These all here, interestingly, all the blue dots that got stuffed here, all of them worked for a sell. What I really like is when the yellow dot is delayed. That is usually the better trade, even though all of these technically worked. Blue dot, yellow dot, blue dot, yellow dot with the X is even better. Blue dot, yellow dot, right? So those are all shorts on the yellow dot. If you just need the combo of both of them, that will work in one direction. But think about it the other way, right? Yellow dot, blue dot, long, stopped. Yellow dot, blue dot, long, stopped. Why? Because we can't breach the yellow dots, right? If you can't get through the low of the blue dot or the high of the yellow dot, it's not going to work. So these work better because you're breaking down underneath the dot immediately, right? Whereas here, the dot is up here, and then you've got like this one. The dot is they're up at the highs, and then by the time you get the blue dot, you're already below it. So it's yellow dot, purple, blue dot, yellow dot, purple, blue dot, yellow dot, purple, blue dot, right? So it doesn't mean, I mean, this one works, but only because they break through the dot. And what you'll find, what I've found anyway, is that most of the dots, those blue and yellow dots, are broken by purple or pink bars. That's the norm. And it's a sign of like a little bit of a squeeze where everybody's kind of letting go. Once it starts to get choppy, what you're going to find, or I've found anyway, is that if an apex doesn't get the yellow dot, the chances that this blue dot break increases. At least I believe that to be the case. If you're sure about the direction, it probably doesn't matter. But here, for instance, you did not have a blue dot get beat. Here, you couldn't get under the blue dot, so there's no trade anyway. Here, you did get under the blue dot with the purple, but it immediately rejected. If you look up here, there was a yellow dot. Why does that matter? Because it ends up becoming a magnet if you're fighting the trend. So here, blue dot couldn't get beat, right? No trade. Blue dot couldn't get beat, no trade. No short. Blue dot couldn't get beat. Blue dot got beat by purple. Blue dot got beat by purple, right? And that one works. And so here you needed to retrace it. But now if you look at this one's actually kind of interesting because you got blue dot, and then on the next apex, you did not get a dot, right? Blue dot, the next apex, no dot. So normally that'd be a pretty good sign. The problem here is that the blue dot is so far away from the apex that by the time you actually beat it, you did beat it with the purple bar, but by the time you beat it, you've already retraced so far on all the, oh, I don't have the right indicators, but the indicators are so deep that it's easy to reverse if you're fighting the trend with your down thrust. By the time you've beaten this with the purple bar, it's like it just bounces. And that's not, you don't want to be selling here when your apex is way up here. You want to be selling here when your apex is up here, not down here, right? So let's go a little further. Blue dot. Now, when it's only like 2 away, blue dot, apex with no dot, huge drop through purple bars. See that? Next yellow dot actually gets extension. This blue dot down here couldn't get beat. See that? But the other direction was yellow dot, blue dot. Blue dot beat yellow dot. It needed one more retrace, and then the pink bar was the entry. Why did that work? Because you knew the direction is up. So I believe, what I'm trying to get at is I believe when you're trading with the trend, you can probably do it with dots or without dots. So for instance, and how you know what trend it is, I've already talked about that in other videos. So let's say here, we know this trend is getting, the downtrend is getting a little bit, it's pushing a little bit heavy, right? So we don't know whether or not it's going to immediately reverse, but we have ways to know that it's time to start looking for a reversal. The key is to know when you can start being aggressive with the reversals and when you want to be conservative with the reversals, right? So let's use a simple rule that says that if we have a yellow dot into a low, and then you have a pivot apex that doesn't get a yellow dot, right? Does this apex now become vulnerable? And my guess is it might, because I know that when you drop down into a new low and you don't get a dot, I know that the chances are you're running low on momentum. So when this one and this one and this one did not get a blue dot, and especially when you then get a blue dot that's delayed from the apex, I know that that's a sign that they're trying to reverse, or they're trying to go in the direction of the delayed dot. So you'll see it all the time with the trend. So if you see here, this dot is delayed from the apex, right? It's a sign, and you're beating a blue dot, right? So this is a sign that they're pushing really hard to the downside. And they have to in this case because there was no dot at the apex. Whereas here, the dot is all the way down here, but there was already one at the apex, right? So if you see this, where it's dot at the apex and then another dot, my guess is the next reversal is you could probably scalp this back to the apex a lot. But then if you can beat this one, you'll get acceleration. And you would know it's beat by printing another yellow dot under it. Right? So this yellow dot is lower than the one that got beat. Which is what I was trying to do earlier, but I messed it up. So here, we'll show you another one. So we need a yellow dot. Okay. Delayed yellow dot. Right? So we should expect that bears are probably pushing really hard. We don't know if that's going to be, if we're going to see it, the results of that right now or later. They get above that yellow dot. They print a blue dot and get above that yellow dot on a pink bar. On this time frame, that's usually a long, right? That is a long scalp. But in the back of our minds, we need to know that this delayed yellow dot range, if it gets taken back, it's bearish. Because it shouldn't if it's bullish. So you get the trade. They get a delayed blue dot. What does that mean? The exact opposite of the yellow dot. It means that the bulls are pushing really hard. We don't know if that means, if that's because they have to or because they're setting up for another move, right? So at this point, the assumption is it's bullish. We had a delayed dot. This one was delayed too. This one was delayed, and now we have another delayed dot here, right? Not at an apex. Later on, we get another. So that little pivot now needs to hold, right? Just like this one needed to hold to stay bearish. But to stay bearish, that would have had to hold, and it didn't, right? And then what you can see is this apex did not have a dot because the dot was delayed, right? Making this buy work more often, but only on this time frame. So now, the basically the most recent dot needs to hold for the very next rotation to go in the same direction. So for this to be another extension down after this dot prints, that range needs to reject to go lower. It has to go from here down. If it breaks over this and prints a bar above it, it's not bearish yet. Okay? It shouldn't, if it goes under it, it shouldn't retake it. Right? Like here, yellow dot, it goes under it. We can assume it's if we think it's bearish, it's definitely not bearish once they take it back. Now, is this a good time to buy it? Probably better if you wait for the retrace. And even better if that retrace doesn't get a dot on the swing low, right? Because then it's like, you know that you're really, it's like, it's real buyers. It's not, because the dots are showing up because of volume pivoting. So it's like a sign that like there was a lot of sellers and now there's not. And we close bullish, right? Whereas when you don't get it, it's like, this is increasing even though there weren't a lot of sellers here. Like if you look down here, volume was not so impressive, right? Into that low. And yet they lift it. So it's kind of like capitulation, and it's likely to occur, but now this low becomes very vulnerable, is what I said before. When you get the dot in the trend, when you get the apex in the trend without a dot, that low, if it gets broken, that trend is probably done. Right? It happens a lot on the way up on the retraces because as these get broken, the trend increases, right? If it doesn't break back up there, it's bearish. So, for instance, here, that high needs to hold for it to be bearish. They try to hold it. Everything's good. They get a delayed dot, right? That dot is delayed. As long as the bulls don't push above this, it's bearish. Well, unfortunately, the higher time frame is bullish, and all we could do is get purple bars going down. That's not very strong. Buyers identify this, trap back in, and squeeze without a dot. See that? Squeeze. They get it above the most recent yellow dot right here. And at that point, we know it's bullish because it was. The logic is you can't continue lower if you're breaking over yellow dots. Okay, you can continue lower if you're breaking over apexes without dots, but not if there was a dot below it like this. If it was a delayed dot and you broke that, it's going higher for the on this time frame, right? But like I said, if this was our last high and there's no more dots up here, that low needs to hold now. Now the interesting thing with this one is that they had the no dot down here, the no dot low, which like I said is very important and vulnerable. If it breaks down, we're probably going lower. But then they put a dot in way up here. So now that dot needs to hold. Right? So the reason this works is because when that dot doesn't break, the result is a pattern of blue dot way near the high of a rotation, a pivot, and a breakdown, usually on a purple bar, of that dot's range. That becomes the strong short if you're trading with the trend. The only thing is your target is the next vulnerable low, which is here. So that is your target. Okay? Once they break above this, well, they don't this time. They just test above it. If they can put a bullish bar with a VPOC above that, it's bullish. No doubt about it. But they can't. See that? So instead, what they do is they trap back into it, they test behind it, and they close below it. See how they printed another blue dot? Right there? Unfortunately, they had a dot. Well, unfortunately for bears, they had a dot behind that too. So this is still our primary pivot point or pressure point where we know for sure if the market trades under that, it's over. But if we want to be aggressive with the entry, we could do the same thing we did here. Dot, apex, purple bar breaks down the dot, resulting in a reversal. Right? So is it the only reason this works is because we identified this apex as vulnerable. The reason this works, even though it's got a dot on it, is because it's actually this level made by this apex that we're concerned about. The entry having a dot doesn't matter. The level, the important level, the line in the sand, needs to come from the one without the dot. Preferably when that dot was just delayed, but still showed up. Because what that says, again, is that sellers got really, really, that there were no, it means that there weren't a lot of buyers right into the high, okay? But sellers got aggressive later. So typically, if you get above this, on this time frame, like I said, you're gonna get a squeeze, but nothing matters from the bigger picture unless you can break above this, because there were no buyers here. Remember, no buyers yet. It turned around, so there was no buy pressure. Selling came in gently. Sellers came in aggressively. They got trapped. Buyers push. They're headed for this. That's their target. But when they get there and they can't get a VPOC and on a bullish bar that's not pink above it, it's basically a rejection. It's a double top. It wouldn't matter if it had a dot. See, this one Here, we'll do it over here. Same thing. Just back up. Whoops. Okay, so the highest one was here. No dot. See that? No dot. That's resistance. For buyers to extend any higher, that is the highest one, right? For buyers to extend any higher than this, they're going to need to close a bullish bar above that with a VPOC above it, I should say. Or when I say beat it. And that bar should not be pink. Okay, so we wait. We have no confirmation, but what we're looking for are yellow dots placed way too close to the swing lows. There's none, right? There's one right there. Yellow dot. So if we get a swing low right there, swing low, we could aggressively try to attack this. Okay. Note we had one here that recently got at least tested, if not beat. I think it got beat. Did it get beat? Did we get the VPOC above this? We did. This one got beat right here. Note this is not a great entry with futures. You don't have... You could do it with options, but you have to be very careful with futures here. Unless you want like a 30-point stop. The stop is the pivot. And right now, the blue dot. Right now, that pivot is all the way down here. They put in a new pivot dot here. And now we can move our stop. Now here, especially if we have a sign of aggression on the higher time frame, which we can check. The higher time frame, we have a star. See that? Same thing. We have a star on the higher time frame. I'm sorry, on the same time frame. If on the full chart, when we have all the signals, we have a star here. Okay. This one doesn't show the stars. Uh-oh, where'd it go? Oh, it's right here. This one doesn't show the stars, but there is a star here. I just have them hiding because we don't need them. It's just an execution signal, unless you're trying to trap them. But right now, we don't need them at the moment. But you'd get the star here right after the dot, and this apex didn't get a dot. So we already know this is vulnerable, and we also already know, even more importantly, that we got a bullish VPOC, a bar that closed bullish with a VPOC above it, above the high of a swing, an apex that did not get a dot. Okay, I know that's confusing, but this apex didn't get a dot, a yellow dot. We got a VPOC and a close above it. So retraces should be bought, right? We can mark off this area. Here, erase the lines. If you want to think about it this way, they're going to try to turn into new support. If they do, it's bullish, right? And then it's probably headed for this one or this one. Initially it was this one because it's the highest one. That's how the trend changes. If it was bearish, I think it was, yeah. You need the higher one to change the trend. But to do that, if you put in more, you can trap lower. So here we got one here. Trapped. Don't enter yet. Wait for the entry signal. There's the entry signal. The blue dot and it's got a star on it. On the bigger, with all the, if you have all the here we do it like this. So here's the all of the signals, and here's just the ones that we're talking about. You get, now you can see this here was our important level, but we put a VPOC, we put a close above it, but the VPOC was below it, so it doesn't quite count. It needs both the VPOC and the close above it. What does that mean? It means this pivot needs to hold, otherwise it's bearish. We get a dot that's delayed. What does that mean? Now this one needs to break for it to be bullish, right? The problem with shorting this right here, because right now it looks kind of bearish, is that our target is technically here. It's the pivot that needs to break, right? Now, they do have a vulnerable level here, but it's got two swing lows in the way with dots that are expected to be contested. So they did put in a dot here. If bulls can get over that dot, all of a sudden they can take this one, right? Because they've got the momentum right now. They're breaking apexes to the upside. In other words, what we call supernova, right? So if we get underneath this and then immediately trap back in, it's probably a good opportunity to buy. They do just that. They get underneath the low with a purple bar, they trap back in. That's long. On the chart with all of the execution signals, it turns green, purple bar, green bar, very good entry. But you see the difference between this being an entry versus this being an entry. So this one got a star, it's not a good entry. How do I know that? This one. How do I know that's not a good entry? Because I don't, it's while it's a star and it looked bullish, we were unable to print the VPOC on the bullish bar above this vulnerable high, which means we basically that we need a pullback. And I want to know if this low holds before I even think about longing. Plus, now we have this as resistance, so my risk reward is like less than 1-to-1. So I really want to get long lower than that. Well, this one sets me up for a really good risk reward because I can put my stop right underneath here, and my target goes up here. They put a dot on a new apex. That is new support. That's a great sign. It might test below it, but they should defend it, just like this. It can do this on a purple bar or a wick, but it should defend. And this needs to get a bullish bar that's not pink with a VPOC above it. Okay, they get a pink bar, VPOC not above it. They need another bar. They get the VPOC above it, and they close bearish. That's time to exit. Okay, not a good look. Note it's got a dot. Right? So bears reacted there. We got heavy selling right there. It's going to be harder to take it because the dot that needs to be broken is at the high. Right? So rather than having someone potentially trapped like this where you can get above them and then pull back and rip, by the time they get up there, they're going to break through the high, so it'll just break out. So preferably here we want to pause, in my opinion. This is our primary target, right? We know if we get above that, it'll be very bullish. We don't want to do it with poor risk reward. So now what I really want, we have to be careful if this pivot is broken because we've got a blue dot, and if we get underneath that blue dot, they're going to race to this, and we're going to have to pause before we decide what to do. So the very best case scenario would be pulling back into here and getting another purple bar followed by a star or green bar and get another shot at it. But the risk reward is going to be kind of fair, fair to poor. Let's see what they do. They do just that. They do get underneath it with price, but not the VPOC. And we don't get the purple bar, and we only get the blue continuation signal. No star, no green bar. It's not that it's not going to work. It's just it's starting to turn into kind of a choppy mess. And to determine who's in charge, we're probably going to need another trap. And for the time being, there's really nobody that can get trapped. Now notice this does not have a dot. The problem with that for bulls is it means that that's now a vulnerable level. And so bears are like salivating seeing that. So now if they trade under that, it has to immediately hold. Now, thankfully for bulls, they absolutely rip it higher. If you were trading the smaller time frame, you may have had an entry here, but I'm going, this is like all the way back to Friday, and I don't have all my signals on that far back. They're not, so I don't know, but you might have been able to get into it a little lower. But on this time frame, you would have had to be pretty aggressive to take that. It's not wrong, it's just very aggressive. I would have preferred that this yellow dot was down here, then it'd be fine. By the time they make it over the yellow dot, see how this yellow dot got beat by a VPOC and a high? Now we know it's bullish, right? This needs to hold still, but we know it's bullish, so there's certainly no reason to be shorting. And pullbacks are hopefully going to get bought. The problem is that's a delayed dot, right? So the bears might actually try to attack that, but we should see that as an opportunity to set up a long. So let's see if they do it. They often will. Okay, here they come. Note they did not put a dot at the high. What does that mean? It means that's now our new vulnerability that bulls are going to try to attack. But it also is a sign that bulls are sort of like they gave up at the highs. So usually the high, like the last high, does not have a dot. So keep that in mind that it might be the high if bulls just give up here. And if they give up this dot, we have to watch for short opportunities. The problem is that our target's right there and it's bullish. So we may not want to take it. But you can see up here, we did get a potential short if you're bearish. You would just need a location. You need a reason to take it. Because right now, I would have to beat that dot to be bearish. And then by the time I beat that dot, I probably don't have great risk reward. But let's see. We do beat the dot. Handedly. We definitely beat it with a bearish bar. It's bearish. If you want to target this, totally fine. That it didn't have a signal, so I would personally need a pullback. And I don't think it signaled here either. So I would need a pullback to get short. Unfortunately, because they got the dot, unfortunately if you get it, is now you got the dot really low in the rotation. So I guess the good news is if you shorted, you can basically put your stop at 12,401.50 because if this gets beat, it's bullish. That's the good news, I suppose. The bad news is it's going to be hard to hold that on a pullback. So if it continues to go lower, I'm probably just exiting the moment I see any bull bar. So no bull, no bull. There, I'm probably out of my short at that point. Because I know that all they need to do is print one more bar and they'll take that yellow dot and they held their pivot. So if anything, that's a buy. It's a green bar. It's still bullish. I would rather skip the short here and take the buy. I think the buy is better here because you're going with the higher time frame and you have a target up here. They beat it with the pink bar. It's usually a pretty good sign. They get another pink bar. Note this one did not have a dot, so it's vulnerable. Late blue means that if I beat that, I'm definitely out of the long, and then I'd have to wait for a trap back in to potentially get back in again. But that dot is what the bears are going to have to beat to turn this around now, and they can't do it. So the green, and then they got a star here too, which would have been an opportunity to add, technically. It's clearly bullish. Okay, they put a second dot in the same rotation. It's not bearish, but it is definitely a good time to start moving your stop up because once they break over this, we should expect some resistance. And if they break under that, it could roll over. So we have to be careful now with that second dot. It's usually a sign it's very bullish though. So it's definitely not a sign that it's bearish. It's bullish to do it. It just means that they're trying to make new support. Old resistance is becoming new support. And these dots will often line up with each other, by the way. Okay, they put in a dot. And if you look, this high that was vulnerable, we couldn't get a VPOC on a bullish bar above it. So what am I going to do? I'm going to exit the long. It doesn't mean I'm bearish, right? Not unless we get under that blue dot. But for the time being long doesn't really make sense. If I can get underneath this and then find a buy trigger, as long as I retake it, I can continue the trend. So right there, they would have had to retake that blue dot for me to be bullish, for me to enter. And at the time, it looks like they've rejected this, and they've broken a blue dot. So most likely, if it pulls back into here, it might set up short, and I can start targeting this. Otherwise, I'm looking for this low to hold for a buy. The problem is there's a dot in the way. See that? And so that's going to cause problems on the trap back in more than likely. So here there's not a whole lot to do, but what I will show you is that we technically had, if you were bearish for some reason, if you saw a higher time frame reason to be bearish, which there might be, you have blue dot late in the rotation followed by a pivot. And so that star, because there's a blue dot right before it, see that? It makes it a little better for a scalp, right? But you might want to be more conservative and wait for the purple bar, but your target's down here. So if you wanted to be bearish, if you saw this as neutral or bearish, it's okay to short the star or the purple bar because of the fact that there's a dot up there. And it's delayed, which means if you break it, this could break. We get another dot right into this one. So see how they line up? That's usually bearish. they're trying to target this, they probably will hit it, right? So this time it looks like the high did have a dot, which is a little unusual, but sometimes that's how it works. If you see, they just put a second dot. They usually need a dot lower to really protect it. Sometimes that's by putting 2 dots. Sometimes it's from a delayed dot, right? Sometimes it's like this, and then reject. This time they put in a dot. They went lower. They put in a second dot. So now, because it's the very first, so normally if it's been bearish for a long time, this is a sign to start peeling off taking some profit. Because this is the high of the day, and we're getting this, it's actually a sign of bear strength. So it means something different at the top. So this number 1, number 2, that is very vulnerable because it's at the high of a it's many rotations. Right? And you can see that doesn't happen very often. Look, if you look back, usually every rotation gets 1 dot. Every rotation gets 1 dot. Rotation gets 1 blue dot. Right? That's normal. When it doesn't, there's 2 things that are usually happening. Either, so 1 rotation, 1 dot. 1 rotation, 1 dot. That rotation starts over because it has a pivot. Either it's the end or it's the beginning. Right? So here, 1, 2. It's the end of the bull move. Why? Because it's bearish. Right? So that's the end. And once that one gets beat, it's over. For bulls, for the time being, right? On the alternative, and then here's bear number 2. Once you beat it, they're done, right? It doesn't mean it can't go lower. It can, this low can get broken. If they retake it, it's actually, I forgot to say that. If they retake this, once they take it back, if it falls below that again, it's usually support. See that? It's usually support. So here, that's a new apex. 1, 2. Okay. 1, 2. If bulls retake this second dot, it's probably bullish. They can't do it here. It becomes resistance. Becomes resistance. Becomes resistance. See how they can't get a VPOC on a bar that's not pink above it? Now they do. This was the first sign on this time frame that anybody was interested up there. So as long as they hold the level, it's bullish. But guess what? If they give it back, super bearish. See that? So they have to hold it, right? So we can do that anywhere. 1, 2. Here's the reason why they couldn't hold it. Bears were sitting underneath a second dot. It became resistance. It became resistance. So I can take this one out. Became resistance. It became resistance. And then it became resistance again. And then it's gone, right? So you can't do that for every dot, but for the double dots you can. And note now look at the beginning of the when it was just started, when you have consolidation. 1, 2, right? So if this holds, it's bearish. Well, they got above it, but they immediately lost it because we had 1, 2. Must have been on a higher time frame. But once you lost this, it was over. That's the second one, right? Oh, it's the higher one. Whoops. Sorry. It's the higher one. Yep, resistance. I think I can, how do I pull that back? It might be a little different when it's a purple bar. It might go down to like a little further because purple bars are like, there's not really a lot of participation there, but it's basically resistance. Once you're under it, the higher of the 2 for the bears, right? Yes, the high, 1, 2, the higher of the 2. This one actually had 3, 4. 1, 2, 3, 4. So this whole thing is resistance. Interesting. But anyway, yeah, that's why that works. But you have to just be aware of where these swing highs and lows are. So where was I? Here. So we traded back into this resistance, right? On the higher time frame, what you'll see if we pull up like the 80 tick there, that's the same exact spot. And what you'll see is 1, 2, right? So this is resistance. And they can't get over it. 1, 2, this is resistance. 1, 2, 3, actually. So once you got a lot of them, and see how this is the beginning? 1, 2, these are all strong because it's at the beginning of the rotation down after consolidation. Whereas the bulls, the beginning is here. So like this one looks pretty strong. But then they put in another one, right? And now any more bull dots and you could get rejection, and then they get 1, 2, it's over. In the beginning, in the direction of the trend. So beginning, okay, here, we'll do it the other way. Bull, right? Beginning, 1, 2, wait, is this beginning? When does it begin? Begins down here. Here, we'll back up a bit. Okay, this is consolidation. Beginning, 1, 2. That's bullish. Drop back into here, we're good. Hold that, we're good, right? That's the buy. Extend, that's only 1 in rotation. I expect to go higher. 1, 2. This is late. It's not the first rotation. And we're getting 2. We're probably going to consolidate. How do I know we're going to stay bullish? As long as we hold this, or they trap back into it. Trap back into it, probably bullish. Now, they only got 1 on the way down. So, certainly not too bearish. 1 on the way down, still not too bearish. Have not broken down below the pivot, right? 1 bull, 1 bear, 1 bull, 1 bear. Nothing's changed. 1 bull, 1 bear. They're not putting a lot of pressure, right? And this is still holding. They hold it down here. That bull got delayed, as did this one. See that? The bears try to take this one, but they held the pivot. That trapped a lot of them, most likely. And then this one is not taken. 1, 2. That's a new start. Consolidation, 1, 2. It's bullish. Bear, 1. Okay, then that's a new pullback. 1, 2. Is it a brand new? No, it's at the end. See that? It's not. I'm counting 2, and I'm not at the beginning. So, in other words, there's 2 up here. It doesn't look like much because it's such a big time frame. But this is an apex, and I have 1, and now I have another one. If I break that one, we're probably coming to this one. If I break this one, we're probably coming to this one. So, we break it. I'm guessing this one's going to be tested. It is. We break it with a yellow dot. Note that's the very first dot of that rotation. Very strong if we can't get above that, right? Because that becomes resistance. Where are we headed? Probably back to this one. Right there. We get another dot. It's the beginning of a downtrend. Very strong. Do not be long. We break down underneath the pivot. They try to save it. That's our third one of the pivot of the rotation. That might be a problem. 3 might just be too many. And we have 1 dot. They break above this. That looks pretty strong. They're going to come back to this one. Oh, sorry, this one, the high one. Right there. That becomes resistance. Note that bull had 1, 2, pretty strong, right? You get a big extension from that second one. This one now has to hold the first one. You get a third one. Oh no, sorry, that's a new rotation. 1, none. Not even a delayed. And that's probably toast. Yeah. So no dot might be worse than 1 dot. I hadn't thought about that. The higher time frame, that seems to be the case. You've got a whole rotation with no blue dots, and that bear dot just pile drives the one before it. Okay. That's interesting. Let's see if that holds. A rotation without a dot in one direction. This did not get a yellow dot. See that? Up, no yellow. Down, no yellow, and a new apex. Does that area... What happens when you get another dot? That's the question. Wow, no dots anywhere in here. There's my first dot. This is probably going to be explosive, I think. Yeah. Cool. Okay. Now does this higher one? Yeah, that makes sense. That explodes. Late dot. Bullish. Late delayed dot. Okay, so be careful down here. They can't break it. We already did this. One dot late. That's delayed. That has to hold. One dot. It does hold. One dot delayed has to hold. That's a little dangerous. And we get under it. And it's over. One dot has to hold. Delayed dot breaks. That's pretty bullish. One dot has to hold its late. Oh, that's two dots. And it's not the beginning of the trend. It's probably bearish. We get the yellow dot and it gets taken out. So all these rotations had at least one dot except for this one. No, nothing in here making, I thought, the next dot. Let's see. So we went, let me think just through. Oh wait, it's not a, here's the, it's not a full rotation without a dot. Oh, yeah, there's no apex to the upside until here, and that one got a yellow, and this one got a blue. So this little bit here didn't get one. But there was no apex here, so I don't think that counts. Not sure. I'm guessing it's apex to apex. You'd think you'd get one every time. But when they're late, when they're delayed like this and then beat, it's a potential reversal. So one dot, two dots. This is now resistance. Three dots. Got to break that. Four dots. That one's probably vulnerable, right? You got a double dot and it's late in the rotation. So that gets beat. You'd think that's bullish, but the problem is there's resistance right here. They get a dot. The yellow dot or orange or whatever is delayed, right? Beating the blue one, but awfully late. And that one actually works. Okay, so it's already bearish and you have a high that doesn't have a dot. That's usually good. I would have preferred that this blue dot was higher up and my risk reward would be better, because I really don't know for sure until we break that. That's the hard part about that. But I think the reason it kind of does work is because you've got a double dot on this one, and it comes back up into the dot, that dot's range. So if this is like a star, yeah, that's probably a short. Okay. With the trend. Okay, here's one with no dot anywhere, right? Up, down, no dot. I'm guessing that the next dot is probably strong. Right there, blue. Is that strong? Yep. That's cool. Okay. Double dot. This becomes important support. It was delayed. There's no dot at the low. This low becomes vulnerable and must hold for bulls to continue. Comes back up to this pivot, reverses, delayed, right? So I'll have to beat that, obviously, to get up there. Okay, and then we get blue. Oh, we got a blue dot here. I didn't see it. Blue dot, yellow dot, blue dot, double blue dot, right? Oh, that's interesting, though, because it's on the way down. I don't know how to deal with that. Is it the lowest one, then? That's weird. I think they just didn't get an apex here. I don't know if I'd count that. Let's see what it does. Delayed. Beat that, and it's bullish. There we go, right there. Yep. So 1, 2. Yeah, this is definitely support, but this one even looks like it's support. It's interesting. Like I said before, this is what I was trying to do when I took that stop near the close, like 30 minutes before the close, is when you have a trade not work, like dot getting crushed, right? Should be short, but it's weak. It's just purple bars headed down, and then they print one more bar, but immediately they get a dot here, indicating that this bar had a lot of sellers, yet this one closed bullish. And so the dot says, yeah, that short scalp you're taking, yeah, it's probably not going to work. Right? Because it's pretty rare for dots to get immediately beat when they're at the apex. So when they're at the end of the rotation, unless you're fighting the trend, it's usually not going to reverse. And this is with the trend. The trend is bullish. Momentum's bullish. So this blue dot did get immediately beat. This one's probably not going to. But remember, this blue dot getting beat is not that much of a surprise because it was delayed. The yellow one was delayed. See that? So that one is pretty strong, but also vulnerable to being hit. We get above the yellow. That confirms it. Pull back. Any buy signal here is good. You probably got a star here. Green bar. Good enough. Diamond. They get above this one. It's clearly bullish. There's our new support. Should be here. Get below this dot. Now the fact that they're sort of close together might make that especially dangerous, but get below this dot and I'd assume that it's bearish. Yeah, having them so close together is a problem because then you got below this dot, suddenly you got below both dots. Now it's probably resistance. Oh, look how late that was though. Super late, immediately beat by a dot. That's usually going to bounce, but the fact that we had this up here, I don't know. Look at that. Yeah, it's gonna bounce. Okay, and now is that resistance? Nope, it just rips right through it anyway. So it's short term, but then once they get above this, it's over. Yellow dot, blue dot, trap, go. You really do need to get above this because if it's trending down, you can't just buy this one. You need to wait till you get above it. But what you'll see is on the algo, you got early warning that this was an area you want to be buying. So if you wanted to take the star, that's cool. Otherwise, wait for this. This probably got a triangle. Yep. So the white triangle becomes the confirmation. White triangle over the yellow dot. Confirmed. Okay, blue dot. Second blue dot of the rotation. Technically third, but let's call it the second. So this is now support. This is vulnerable. Purple bars. So it's probably going to bounce. Nope. Just totally let's go. So, oh, I forgot to mark this off. This was vulnerable resistance. We got above it. So as long as the pivot before it holds, it should be bullish. But that pivot is way down here. That apex is way down here. I don't know if these count as a pivot now. Not sure. But this one getting broken is a problem. One way or another. They put in another yellow dot. Oh, this one got broke too. So 2 in a row got broke. Oh, and then it acts as resistance. That's probably a sign that something's really wrong. Yeah. This was like something's happening here. It was probably like data or something. Econ data. Because that's abnormal. Whatever. It makes sense. They broke below it. It became resistance instead of support. 1, 2. Pretty sure this is now resistance. Right there. Breaking down blue dots, coming back into yellow dots. See how they line up in a trend? That's usually a short. Because they line up. And especially when they have an X. If you haven't noticed that pattern, if I just go back a little bit, the dots with an X in the trend, in the direction of the trend. I don't know how many I've had. Dots with an X in the direction of the trend are usually good entries or enter the retrace into their range. But they need a dot. that one did not have a dot, and it gets totally reamed, right? You have to be careful not to. It's not the X, it's the fact that the X is aligned. All right, so this one was a big seller. You can see, even though he had a purple bar and it looked like it was going to fail, they still support him. They defend it on the way back. This one got a dot, it's going to sell. Right? Not forever, but see how when it comes back to the area, it becomes resistance? Find some more X's. It's a cool thing. I don't remember where I was, but it looks like we were... Okay, dot with an X, even though it's followed by pink, continues higher. Even though it's not in an apex, it continues higher. But whereas if you get a dot that's not at the apex, and it's like delayed, or it's the second dot, and that dot is followed by pink, if this wasn't an X, it's probably going to reverse. See that? So now this one gets taken. That resistance can't get taken out. This X had a dot, it's probably going lower. So 1, 2, 3 in a row. So this is interesting, where you now have, I would think, you now have this being support and resistance. It's interesting. So both of these, blue and bears and bulls, printed more than one dot in the rotation. That was like a long, weird rotation. So when we get under it and come back to it, it acts as resistance. And then the bulls did it again, though. See, the bulls got 2 and 1 again. So now this is support 2. So it's going to probably chop. Yep. That's cool. Okay, X. Now, this one was at an apex. You don't necessarily need the dot for the X to work at an apex. So if the X is like a new higher high, it's actually really strong for a reversal. The dot is just delayed. That's bearish. It breaks underneath this with the purple bar. That's bearish. Where are we going? Back to this. Oh, they got to break this one first. No dot. No dot on the entire... No, they had a delayed dot. So this is where they're going. Yep. They break underneath it with another dot, but it's a new rotation. It's headed here. Note they can't get the VPOC underneath it unless it's a bullish bar. That's usually pretty bullish. Trap back in. This one doesn't have a dot. This one does. That's pretty strong. The problem is resistance is right here. They don't care. They just rip right through it. Interesting. That was Sunday night. But that's definitely noteworthy. Okay, so this one is now vulnerable if they can get down there. That's the one that needs to hold. Dot. Second dot, right? So now let's erase the lines and we'll restart with a new support, which is this second deeper dot. This dot gets beat by a purple bar. Right here, you'd think it's bearish, but your target should be here. There we go. Target met. Blue dot. Now that's interesting. Blue, yellow, lower. So this is now resistance. I'm pretty sure what follows is chop when you do that. X with the dot usually continues. Unfortunately, they printed it twice in both directions. So one of these is obviously wrong. What they usually do in this situation is they trap behind one of them and then go the other direction. So see how they got a purple bar underneath this one and then a bullish? So this is going to break above that apex because these are two both in a row. If you took that short, you just have to be out down here. You don't have to exit just because you get the X in the opposite direction. Just take profit quickly because it's gonna squeeze most likely. Yep. That is wicked bad. So cruel, but that's just how it works. All right, 2 blue dots, right? Oh, note the blue dot here. Yeah, we got the red underneath, the purple underneath it, but it traps back in. This bar probably has a star. Oh, just the blue square, not as strong. And the diamond. Okay. 1 dot. This dot got immediately beat, even though it's not really delayed. It's like at what looks like a pivot. That's really strong. So dot followed by X in the opposite direction You, as long as you're trading with a trend, like you're on a higher low, it's usually pretty good. So like this dot followed by X in the opposite direction, that's usually pretty strong. The problem here is we also had an X before it, which was also pretty strong. So they needed to sweep and then they go through. But this is confirmation that we're good to go. And this will often get a star on the top, smaller time frame too. It didn't this time. But yeah, dot followed by an X in the opposite direction. Like this, look, if it's bearish here, dot followed by X in the opposite direction. You don't even need a dot here. It's still good. I think I said it, but I didn't explain it. So, okay, 1, 2 blue dots. This needs to hold if it's going to be support. Note they go through resistance. I think that resistance is probably done. They print a third blue dot. Probably not going to hold. And note that this here, we did not have any apexes with no dot. Oh, this one. They tried to get over it. They did get over the apex, but it's old. So, and it's yellow. I don't know about that. What that means. I know what it means, but I don't know if it's maybe not to be trusted. It's usually a sign that things are getting a little bit overblown. It needs to settle down, but they did technically get a VPOC on a bullish bar above the important level. But I'm wondering if because it's yellow, it may need to consolidate first. This one is also vulnerable, so now they need an apex of a VPOC above that. Oh, and they put in a vulnerable at the low. Darn. So no bull, no dot at all in this rotation, meaning the next dot is probably really strong. So that yellow dot is probably sellable. That actually works. That's cool. Okay, 1, 2, 3, right? 3 dots in a row. For sure, this one needs to hold if it's going to be bearish. Wow. Does this one, a set of 4, does the second one become resistance? At the moment. So there's a 5th one. They break above it. We get this little pivot action, dot, dot, dot. Is this econ or something? No. Interesting. So this was the blue dot was absent here. So you would think, and then you get another one. So you'd think that this would be a very strong push. But then they get a blue dot, yellow dot. They can't break this. So, and it's bearish. So and there's no blue dot here. So this one's vulnerable. So I assume we're going lower. Okay, now that's resistance, right? Here is now resistance because we printed another dot below it. That one was very vulnerable, yet they couldn't get a VPOC above it. No pink bars above it, see that? And no VPOCs on a bullish bar above it. It's not bullish. They did get a dot at the low though, so that should be beaten by purple bar. Boom, breakdown. Cool. Okay, 1, 2. This is resistance now. It's behind like front lines are here, and this is like behind enemy lines now. So they should defend it, and you can stay short. 1, 2. This one is a set of 2. This one should be defended. It is immediately, and it is secondarily. That is neat. Okay, no dots here. See that? No dots. So the next dot should be pretty strong. There. That should result in a breakout. I don't know if it's immediate, but it's probably bullish. Yep. That is so cool. I don't know about you, but that's pretty neat, if you ask me. So dot, dot. Now this is support. Okay. Dots, X's with dots on them are usually pretty strong. Even retraces into their range can usually be bought. That's usually a buy. Dot, that's a late dot, right? But look at thankfully for bulls, it printed 2 more bars. So by the time it beats this, they'll have to use a lot of energy. So it might not matter. Note they do come back up to this area, but I think it's actually this one. because they printed more. Yeah, see, they can't break above that. That's probably pretty bearish. Yep. And then they get a dot across from this one. That's bearish. They come back to the support. There's no blue dot anywhere in here, meaning the next yellow dot's probably pretty strong right there. Yeah. That becomes resistance as well on a retest. Okay, dot, dot, right? So 2 dots right in a row. This one's late. Delayed. This one's probably pretty strong. It's at support. It needs to hold. Dot, dot. Unfortunately, this is the exact opposite scenario, right? So now you have a situation where you have 2 blue dots in one rotation, meaning this should get defended, okay? But this one's getting beat, potentially. So if there's a purple bar, it's technically bearish, but it looks like it's going to chop because of this being the second dot in a row. Purple bar, normally you'd sell that, but I don't know if it's going to work. See that? It gets choppy. Yep, I knew it. That makes sense. Okay, they can't get under it. See how the VPOC can't quite get under the low of that important level? So they try to save it again. In here we had 2, and then here we had 2. So this one is a bearish pivot. So this is like the chop zone, like the no trade zone. And we need to get a VPOC outside of that to really know what's going on. We print a dot below, right, which you'd think is bullish at the apex. They try to trap back in, but then they get a dot inside. Yeah, it's very, very tricky in here. Dot on the bottom, it's pink. Dot on the top. That's a VPOC below. This VPOC is below the line in the sand from the double dot. And it's got an X on it. This is probably a sell. And it's the second dot in the rotation, so this becomes resistance as well. Dude, cool. Okay, third dot. Usually it's beat. Dot with an X. Usually it's bought. Buy. Pink bar beats the dot. Where are we headed? Probably back to this. We get a second dot. This is now bullish. Oh, sorry, not there. This is now behind enemy lines and probably getting defended if it goes there. Okay, we get a third dot. That's usually beat with a purple bar, but it's bullish. See that? So you don't have to short it, but we expect this support to hold. The old resistance acts as new support. We get a dot here that's immediately attacked by an X with a dot. That's clearly bullish, right? This is probably finished, if I had to guess. We had 3 dots in a row, and they could not make it back to the main support. So, and then we also have a resistance here that's vulnerable. So my guess is we're going higher at this point. Yep, we come up, we test it, we can't. See how they can't get the VPOC above it? So immediately exit. Note we had 2 bullish dots in a rotation. The earlier one is support. You expect them to buy that. I wouldn't, if this had a buy signal, I'd probably buy it. It did. I'd probably end up buying that. And that's like the first stop I've seen. Okay, and you know right here, because it's an X with a dot, you don't want to be long in that. And now you got an X without a dot, but it's with momentum. And we've broken below this support. I'm pretty sure it's going down here. Yep. Second dot. This is now support. And we come right back to the support and they bounce. That's probably a long. Doesn't have a signal. Yep. Green bar. Cool. The dot is way delayed. That's probably coming all the way back. You reject out of the resistance. I bet you it's coming all the way back. Yep, X with the dot. It's over all the way back. Trap back in. Dot gets beat by dot. That's probably going back up again. Oh, they put in another dot. I'm trying to think of a reason why this isn't bearish, but I'm pretty sure it is, because now you'll probably get a purple right into the dot. Yep. Wow. I can't believe how consistent this is, you guys. I mean, I don't know about you, but I'm super excited to trade this. Like, I don't know. This is working better than I thought it did. At least on this day it did, Tuesday or whatever. Okay, dot, X with a dot. So this should be bought more often than not. This, oh, they got a VPOC below this support. It's probably bearish. Right there. That's probably that's probably the end. It's a delayed dot. So now our very first, to be bullish, we need to break that. Right? And most likely this is going to get broken by purple bars. Purple, it's over, I bet. Oh, they didn't continue. Yeah, there we go. They sweeped it one more time. They got to go now, right? Yep. Not surprised. Okay. That's a delayed dot, so they might be able to bring this back up. No, they can't. It's way too far away, yeah? Yeah. Okay, that's the first dot. That one is very delayed. Beat it. That should be, but it, oh, this is interesting. This is an X with a dot that got beat. I wonder how they deal with this. Is this just a sweep? Yes. It's just a sweep. That's sneaky. Okay, so, oh, interesting. So the X of the dot you expect to extend, but it's very, very low. It gets trapped, but then they put in, the buyers put in a dot that gets beat, but not with VPOC, right? You'd expect purple bars to come next. They don't. Instead, this gets beat by pink bars, which is pretty bullish. That whole thing is just a really weird sequence where you, like, I would expect, I guess, chop at this point because you've had, this is interesting because it's one rotation, but you've got two yellow dots that have been beat. Oh, but not by a VPOC that's not pink. So I think the way to think about it is as long as you can't get a bullish bar that's not pink above that, it's probably bearish. That's tricky. Yeah. Wow. That's hard. That's tough, but it does work. Okay, so the lots of pink bars in a row, you got to be careful. The yellow dots will act as new resistance if you lose them. So again, getting over, this is that same concept. I just didn't apply it right. The hard part is when you've got the dot and then it's beat by a dot, you have to be very careful that it doesn't just chop it right back up. You can't just go dot dot sell when it's bearish. It works a lot, but not every time. Just like you can't go dot dot buy. You need to actually get beyond it. And what's hard is it can get beyond it, and if you're counter trend, it'll sweep you. Very tricky. Okay, so that's a delayed dot, so they could swing this back the other way if they wanted to. Yep, I knew it. So this definitely leads to chop. The dot's going in the wrong direction, basically. Going up and printing more yellow dots, or going down and printing more blue dots. It produces an area of chop. That's probably not a good idea to trade. So you should probably wait till the market leaves this area because you're going to get a lot of these. And note that this is on both sides. You have vulnerable bars. So if you want, you can just wait until you get a VPOC beyond that, and you'll totally avoid the chop. So once you get, now it's over this. Right there. So now I know it's bullish. And now I just need a pullback with an entry, hopefully, to get me long. But because I'm right into resistance. So I don't want to long that, right? Don't long resistance. But as long as this pivot holds, it's bullish. Now, does it hold? Looks like it's going to hold. Did I get a star there? I probably would have bought it if I did. I got a green bar. I would have bought that. I think I did buy that. Only reason not to, you have resistance right here. But I don't think it matters because I'm pretty sure that's just a straight up stop. They did not put a dot there. So the next dot is going to be strong. And that's it. Fuck. That's cool. That now is going to work. Jesus. So you could literally just wait. If it gets choppy like this, even if I took a stop in here, if it gets choppy like this, and puts a ton of dots everywhere, I could just wait for a rotation that doesn't have a dot. And then just be like, next one I'm going. Next dot I'm going, you know? Because this one, oh, hold on. Who didn't have a dot? This one had a dot. This one had a dot. This one did not have a yellow dot. See that? And this one did not have a yellow dot. It had a blue dot down here, but when that yellow dot comes in, if it breaks this blue dot, it's over. This didn't have a dot. The next dot should probably be pretty strong. Right there. This one is telling. That is your entry. Did that have a star? No. Interesting. Doesn't need a star. Wow. Okay. That's cool. All right. No rotation. No dot, I mean, in the whole rotation. So this dot, probably continuation. Jeez. That is like 90% accurate. In the last couple days, anyway. I'll have to go back and see if this works elsewhere, because it seems to work here at the moment. So, dot. New rotation, right? Dot. You have to beat this to be bullish. Oh, they get a dot. They gotta beat that to be bearish. Looks like it's probably going to chop, because you've got another one right here. Yep. Wait, you could just wait for a rotation with no dot if you wanted. There it is. Rotation with no dot. Wait for the next dot. Follow it. Right there. That's probably a long. What? Look at that. That's cool. So now lots of dots. So I can wait. Otherwise, I can identify that this is what needs to be broken to really be long on the higher time frame. And this needs to be broken to be bearish on a smaller time frame. So, because it doesn't have dots on them, right? So those apexes form naturally. Then they get this one formed. But look, they can't get the VPOC above it on a bullish bar. So this dot becomes very strong. Just like down here when they can't break below it on a bearish bar, or it's purple, the next dot up is going to be a pretty strong scalp. Which is why you might not want to take this one, because it doesn't get above it. So it's like early. Plus it's purple. That works beautifully. No dot. That dot should be really strong. That dot should also be support now, because we put a second dot in. It was delayed. It might not hold. This dot is vulnerable. Or this VPOC is vulnerable. Comes back up. VPOC. This apex is vulnerable. Comes back up into the level. Does it hold? It doesn't. It comes back to this. Oh, can it not get the VPOC above it? It couldn't get VPOC above it. Almost, but not quite. Okay. Rotation's got 2 dots. Rotation got 1 dot. Let's see if the next rotation gets no dots. No dots. Perfect. Next dot should take us wherever we're going. It says it's short. That should be a short. It's got a star. Dude! That's like 8 for 8. That trade alone is so powerful. I can't wait to try this. Okay. I'm going to have to watch this video myself to make sure I get this right, but I think I've got it. We're at Tuesday still, so it's slow. You can obviously do it on any time frame, I think. Dot is late. Get over that dot with pink. You're good. You get the trap. We saw that before, right? Trap them. Get back up above them. So this is dangerous because this dot is so nearby, and that's your support technically, or your resistance that you're working off of. And so this probably becomes a pretty good place to long. The problem is you've got resistance right above you, so maybe not. Yeah. Huh. So that was the problem. It set up as a trap, but it ran into resistance. No rotation. No dot in the rotation. Next dot is that. That's a short. Short. Booyah. Dude, I'm going to make so much money. I'm gonna take those trades with huge size. I can't fucking wait. I will blow up the account doing that if I have to. That seems to work really well. Seriously, if I can figure that out and I'm right about that. Okay, dot. You have this vulnerable line in the sand here. You did get a VPOC below it. That's pretty bearish. In and of itself, that's pretty bearish. So right now I'd be like, oh, it's probably going lower. I'd prefer to short from up here. Right? But there might be scalps to the upside. So here's a dot. We get above it on pink. It's usually bullish. Pulls back. That's probably an entry if you're okay trading into resistance. Yep. Trades right to it. Reverses. There's a dot here. Is there no dot on this time? On this? Or, no, they got a dot in there. That's probably a short, but I don't know for sure. Because there is definitely a dot in every rotation. So I don't know for sure if that's a short or not. But it's at resistance, so you'd kind of think it is. But it did get above this. The fact that they got a bar with a VPOC below this vulnerable level usually results in a roll down. I just don't know if this dot is so late. See how it's a delayed dot? If they beat that dot, it's gonna go higher. So they're coming for it. They gotta beat this. I don't know if it's still resistance. They do beat it. It's still resistance. Yeah, see, that's the problem with these counter trend trades, is that by the time you have any momentum, you're trading right into resistance and it doesn't go anywhere. You get like 8-10 points and then it's over. Still got a dot here, so maybe it will work as long as this holds, it's fine. The vulnerable line in the sand is now there. All it has to do is get a bar above that. I don't know why it's not dropping considering we got this. There's some aspect of it I'm missing here. They do get one. Now you'd think it's bullish. On the next pullback, I'd be buying. Oh, wow. They get a dot. They get below this. Wow. So they signaled short. They signaled bearish here. They had to pull all the way back up. Gave you the indication that buyers were setting up, and then buyers just were nowhere to be found. It never triggered long. It didn't stop, but it definitely made me less willing to sell up here once they traded above that. So there must be one more piece of the pie when it does this, but it doesn't set up. See, technically you could have shorted that, but it doesn't go anywhere. And so the second one actually worked, but this one got the VPOC above that. So you'd think that would be a sign that buyers are preparing to push. They just were nowhere to be found. And that dot that's delayed doesn't get attacked, meaning it's bearish. Bearish. So this one now needs to be beat for the pink bar, and it is. That's a vulnerable level. No doubt at the low. It was super delayed. They might try to attack that once they hit resistance. Nope. X with the dot usually rises. So this VPOC being above the vulnerable line, it's like it's delayed. This one got below it. It eventually went lower. This one got above it. It looks like it's eventually going to go higher. Oh, no, they trap it. So this looked really strong. And they immediately beat it. Wow. And then it's done. Right? Purple bar underneath the dot, it's over. You're looking for an opportunity to short now, I believe. This is now a new vulnerable bar, vulnerable low. So wait, we never did get up here. I thought we were going to go up there. Dot is late. Here's your short opportunity right there, the purple bar underneath the blue dot. Get up above the yellow dot and it might be bullish. Oh, this became support. It's the second dot. There's two dots in this rotation. This is support. That's a buy, most likely. Yeah, green bar. Buy that. Breakout.
Only one, two, only one, only one. So a yellow dot, it's got to break this to be bearish, but it's got this pivot. This is now vulnerable, if it can get above that. Oh, it just goes right through the pivot. Second dot, making this the new defense. Third dot, that might get busted. They trying? They did. Pink bar. There we go. Okay, up to the resistance. Double dot in the beginning. That's usually pretty strong. 1, 2, 3, actually. This is, so they got under this, but they couldn't get a VPOC on a bearish bar under it. That's your typical flip. Trap back in. And that's now support. Wow. Right through resistance like it didn't even exist. What time was that? 5, 6 o'clock. Interesting. Does it work on the way back? Let's see. Not challenged, not challenged, not challenged, not challenged. Look at all those blue dots, not challenged. This one's finally beat by a purple. It's probably going lower. I assume it's going to retrace most of these. And we get an X with a dot. That's pretty strong, right? Purple bar taking out dots, usually pretty strong. Oh, they held this, which was old resistance. They got the VPOC above it. They came back into it. Old resistance, new support, probably. Or not. Or they just reject it. They try. They try, and then they beat it. So you'd have to get over this dot, remember, to really know. They try. They put another yellow dot in, and they get under the blue dot, I think. Nope. They trap back in, bullish. Until, no, it still hasn't done anything yet. Pink bar over the yellow, that should be bullish. Wow. That was sneaky. They don't make it easy. Blue with an X, usually bullish. Unless they get beat, then it's done. Yeah, it's done. And did any of these not have any dots? All the rotations had one dot of each color. X with the dot again gets beat. So that it's got to be trending for those to work. See, I thought it was maybe bullish trend, but it's resistance, I guess. Not bearish trend. No dot. The next dot should be followed. Right there. That should be a short. Dude! Holy shit. It's snowing in Vegas. What the hell? Okay. That is nuts how often that setup works. Okay, it comes all the way down. Let's start over with the lines. I don't even know what day it is. I think it's Wednesday here. I think this is the open. This is today. So today's open is here. So we had the highest yellow dot on this rotation after the no rotation. So see how this had no rotation? No dot in the rotation? That makes this really strong. Dot, 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 late dot, late dot. Late dot with an X. That gets beat. So that's probably just like a breakout almost. But then look, they put late dot, beat it by purple, that's bearish. Yeah. They don't even make it to the top one. But do they beat this one? At the VPOC? They do. So it probably is going to go at least to this one where all the volume is. If I had to guess, the next stop is here. Let's see. They trap back in here without putting a VPOC below. This is probably a good entry. No entry signal really, but other than the arrow, which is not necessarily a good signal to enter in. It's usually a good signal if they hold it like this. But second dot, this is now support. Doesn't work all the time, but that seems to help. It should come back to that resistance now. But if they don't break this, that's a vulnerable bar. That should be easy to break. There we go. Dot with an X should push us through. It does. We get a VPOC above this. That could now be new resistance. I'm sorry, new support, old resistance. Do they get stuck here? They do. They have a couple dots in this rotation. I'm not sure which one's going to matter. 1 and then 1. We take out this dot. It's probably going lower. Yeah, but see, this dot holds. They break this dot with a pink bar. That's a long. Dot, dot. They still can't get above this with a VPOC, so it's probably lower. Or not. Let's see. Oh, double dot. Right, I forgot. Double dot. So this is now support. I forgot. Come back into support, bounce the dot. It's long. Okay, this is vulnerable. Oops. No dot at the top. It was delayed down here. They sweep it. That's usually a short. They sweep this into support. No dot in the rotation. That's a short. That's the first one that didn't really do anything. It got you 10 points, maybe 9 points, and then broke. So there was no dot in this entire rotation down. And they came up and they hit a. I would have preferred a blue dot. Is the next blue dot good? Yeah. Next, so it's like it's got to go in the opposite direction. That dot's probably good. Interesting. Okay. Maybe not 16 contracts for that setup, but definitely gonna take 3. Dot gets beaten by a pink bar. That's usually good. Although it's not a delayed dot. Maybe not. Maybe just wait. Because it's consolidating. So these don't work. They're not that helpful until you get out of the area. So now this and this. Those are the lines in the sand that you really need to break before you know what's up. Unless you can get a delayed dot, which we can't seem to do. Oh, there we go. So now we're finally probably done with this support. It's now got a vulnerable bar near the high of that support. We break through this with the dot. That's interesting, rather than a pink bar. Yep, we definitely do break it. That's an interesting way to do it. There was no dot at the bottom. They delayed it this long, and it didn't get beat right away, so that's bullish. I probably would not have got that on this time frame. Oh, no dot. Let's see if the next dot is important. That should lift us. Yeah, it worked. Okay. We beat this one with the yellow, and then they beat it. That's probably a problem. If they beat this with the purple, it's probably over. Yeah. And then that dot becomes good. This holds, not surprised. This was a double dot, so this may be resistance. Yep. No dot in the rotation. Next dot is probably good. Dude, where's the dots? Where's my dot? There you go. Dot. Boom. Dot, dot. That's a late dot that got beat. That's usually good. Late dot that got beat. That's usually bullish. Double dot. This is now new support. I think I get it. Triple dot. This one's usually broken. Oh, look at that. This old support still held. Late dot gets busted by a purple bar, probably bearish. That's the follow through. Goes back and traps back into the support. You really do have to mark those off. And so now my resistance is here. The first dot of that rotation. It gets into resistance, gives us a dot. It's probably a sell. This now becomes new resistance because we got another yellow dot below it. Dot, 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 dot. Late dot probably breaks up if we get a pink bar. It's support. Nope, we get an X with the dot, and that's a continuation. Late dot gets broken by support. That's new support. And it gets another dot, so this becomes line in the sand. Dot, dot. Ooh, I don't know what to do about this. There's no dot at the top. Oh, not surprisingly, it comes back. Okay. Support. Tries to hold. They put another dot in, and it rips right through it. Wow. Dot late. Pink bar breaks through. Should be bullish. Yes. Oh, yes. Okay, I was like, wait. Every rotation got a dot there. Once this got broken by a pink bar, it was good to go. Oh, wow, but it did not continue past the vulnerable bar. Got beat. Late dot. That should go higher. Yep. Dot higher. Wow. Late dot. Does it get beat? Nope. Probably lower. Okay, now this is resistance. Oops. Late dot. They can't beat them. Look at all the dots with the X's get continuation even though they're purple. That really stumped me today. I did not understand that. And now I get it. They're trying to beat them. They need to beat them with a pink bar. That is the breakout. So I was trading that the wrong direction. Yep. And so there's your entry for the scalp. It goes to resistance. It gets stuck. That's okay. Okay. It does break above the vulnerable bar. That suggests we're going higher. But maybe we have to go lower first. Yeah. Now it's up here. Comes into resistance, rejects. There's another one down here. They sweep back in. That's usually good. Better if it has a dot. Notice there's no dot all the way through here. The first dot is probably good. But it's consolidation, so I don't know which direction. Yeah, in this case, it's not the very first dot. It's the first dot to the downside. Well, the first dot that got beat was definitely good. Okay, so here, X of the dot gets continuation, but not very far because they're purple. We get into support. It bounces with no dot. First blue dot is up here. It can't get beat. This is consolidation, but it's a bullish trend. So the dots can probably just be followed through. That's hard. That's very hard. No pivot, no dot. Next blue dot gets bought. Kaboom. Holy shit. And I guess those calls are working out. I wish I would have bought more. All right, well, I hope this was helpful to you guys. It was really helpful for me. I've got some new ideas here. And like I said, I realize this might be frustrating and boring because you don't know what the stingles mean, but I'm telling you, if you can find a way to systematize your ideas, your confidence will explode and you will be able to see things you never saw before like this. So I really recommend you do it. If you don't know how or you don't have the time or whatever, please reach out to us. Okay, our team is really strong. We're not accepting new members in February, but we may in March. So I definitely recommend giving my coach Simon an email, trade_wordperform@gmail.com. We can help you be more consistent and systematic in your trading. The hardest part is that you're going to be under pressure because there's a cost to the room. It's not super expensive, but the cost associated with the room puts a lot of pressure on people to make money, and that's why having a systemized approach is super important. Once you get over that hump of making that $150, $200 a month without a problem, all of a sudden you realize that you can accelerate your trading like you could never before with these new tools. So it really is worth it to at least give the general regular membership a try. I personally needed the one-on-one coaching to break out myself, but if you're not stubborn and you're really disciplined on your own, you might not need it. You may just need access to the tools to see how it's done, and then it just might be a matter of turning whatever you're already doing. If you already have something that's profitable, being a general member and just understanding the process might be all you need. But if you don't have a system already, you're probably going to want to be a premium member and get some coaching. But I'm telling you, it's worth it. So talk to Simon, trade_wordperform@gmail.com. You can always talk to me on Twitter @RedbenTrader. Happy to chat, and just follow me to see some more new ideas or get links to new videos by subscribing to my YouTube feed. I